I hope you have revised. Okay, Shreya, you answer. List of all exempt incomes without looking. Daily allowance received by MP MLA. Correct. 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 Interest incomes on 10, 15. Gold bonds and POSBA, Post Office Savings Bank account. And what is the amount of exemption for Post Office Savings Bank account? 3,500. Then, no, 1032. That is 1032. 1032. Yeah. Correct. 1010D, amount received from life insurance policy. Okay. Yeah. Okay, Vipin, you answer. Yeah. What are the two M's in D.W. Ramu Fakir G? Salary received by MPMLA taxable. Who will pay the tax on income of minor child? Parent whose income is higher. Correct. Okay. Then Gaurav, you answer. What are the five heads of income? House property. Correct. Now income from house property. When income is called income from house property? Yes. There has to be a house which is a structure of four wall and a roof, and you should be the owner. Okay. What if you are not the owner of the house and still you get rent income? Means it is a rented house given further on a rent. Then it is subletting. Okay. Yeah. Yes, yes, yes. And that is income from other sources. Okay, okay. Okay. You answer what is capital gains? Yeah. Profit or loss on sale of asset. Okay. Okay, Vivek, you answer. List of exempt incomes. This whole list. Good, very good. Gold bonds. Income of minor child. It is exempt up to how much? What is the limit of exemption? 1500 per child. Okay. Award from government 1017. Correct. Then 1019. Family pension received after the death of an employee of armed forces. What to say? Employee of armed forces. After the death of an employee of armed forces. So that was family pension. Then you said 1010D. Yeah. 1011 is remaining. What is 1011 and what is 1011A? 1011. 1011 is such a famous account. Everyone has PPF account, interest on PPF account. Then 1011A, correct. Okay, Vishaka, you answer. Yeah. We are computing income for the year which is going on or for the previous year. We compute income for the current year or the previous year. And what is our previous year for our exam? 23-24. And what do you mean by assessment year? Yes, the year in which you calculate the income of the previous year and you pay the tax. That is called assessment year. And in our exam, will they ask any year or our year is fixed? Fixed. Previous year, if they say it is 23-24, and if they say assessment year, it is 24-25. Okay. You tell me 5 heads of income. And then what is capital gains here? Means here capital gains means what? Okay. And then what is income from? Okay, which two salaries are salary, but they are not treated as income from salary? There are two salaries which are actually popularly called as salary, but they are not classified as income from salary. Correct, good. Salary received by partner and salary received by MP/MLA because they are not employees. Okay. Income from salary means when you receive it as an employee. Okay. Okay, Vanshika, you answer. All exempt incomes, the same thing. Sukanya Samriddhi account. Correct, correct, good. Yeah. Okay, now see, last lecture we started with the topic income from other sources. See, just to have a recap of the previous lecture, see in the last lecture what did I say? In income tax subject, what is your objective? To know how to calculate the income and how to calculate the tax. And incomes are classified into 4 categories: salary, house property, business, capital gains, and income from other sources. And each income we have to calculate separately. And then we combine all the incomes. And after we combine all the incomes, what you get? Look at this. No, what we get is called gross total income. And then there is something called deductions and then net taxable income. On this you compute tax at the rate of certain percentage. But how to calculate tax, that we have not started. We have just started with right now how to calculate this figure. And this way we have the mission of learning to calculate each and every amount in this statement. Okay. So in income from other source, there was a keyword I gave you. That was D.W. Ramu Fakir G. In this keyword, you have to remember that which incomes are taxable and which incomes are exempt. And most of the incomes in this keyword are taxable only. Okay, but there are certain incomes which are exempt under section 10(1), 10(17), blah blah blah. That is what we did. Okay, and in this still we have to study the theory of the gift. Okay, now gift theory I am not starting right now. First, I will take you to another theory called deductions. See here, there is something called deduction under section 57. Okay. Now see, every chapter, every head of income you will find deduction. There are how many heads? Five heads. Under each head of income you will find a concept of deduction. And you know why the concept of deduction? Because whenever you earn the income, you have to incur some expenditure first. To earn any income, there are some related expenditure, and for expenditure there is a concept of deduction. And you know what basically government says? See, you are earning the income, but if to earn the income you incurred some expense, you can net it off. And after netting off your expense, you have to pay the tax on the net amount. Because see, government cannot ignore my expense. Yes, government has seen my income. You are earning so much, but to earn so much, I have to incur some expense. For example, I am starting a coaching class. Okay, rather I am running a coaching class. So in coaching class, I might get lot of fees from students. But to earn fees from the students, don't I have to incur expenses? I have to incur expense of rent, I have to incur expense of electricity, I have to incur various expense like salary to staff, etc. Only when I incur the expense, I am able to generate the income. So that's why under each head of income, whether it is salary, house property, what are the five heads? Income from business, capital gains, income from other source. You will notice you earn the income, but to earn income, you have to incur some expense. And these expense government says you can minus. And after deducting the expense, whatever is your net income, on that you have to pay the tax. And that is good for us. Why? Because if government ignores my expenses and government says to hell with your expense, we are income tax people, we simply see your income and we will tax your income only, ignore your expense, it would be unfair. See, income has come, but it has come because I have incurred the expense. I am getting fees from my students, but because I have incurred the expense. That's why government cannot ignore my expenses. So, whenever government considers my expenses, so it is by way of a deduction. But every chapter it will not be the same section. Huh? Under this chapter which we are doing right now, income from other source, it is deduction under section 57. And then when you study income from salary, you will find deduction under section 16. And under income from house property, under section 24. So this way different sections will be there in different chapter. But one thing is common, under each head of income there will be concept of deduction. And deductions are connected with your expenses. Okay. So in short, see, while income from other source, sum solving also, if you come across some expenditure, you have to deduct it from the related income. Whichever income it is related to, you have to deduct it from that. Say for example, look, try this. See, I will take 5 examples right now. Just keep a count. And in this 5 example, I am going to set 5 important rules, which you have to eventually by heart. And these are rules of section 57. So how many rules you will have to by heart? 5. So one by one. And for 5 rules, I have taken 5 examples. So first rule is a basic rule which I said also, that if there is some expenditure connected with some income, you have to deduct it. So just see it practically. Look, for example, I have received rent of plant and machinery 5,000 per month. Now see, whenever they give you income per month, you will have to convert it into 12 months. Because we compute income for 1 month or 1 year. 1 year. Income computation is done from year to year. So this I will have to convert into 1 year. So that you can do multiply by 12. And then they will give you expenses. As soon as you see expense, you should be remembering deduction under section 57. And since this expense you have to minus, obviously first I will write the rent amount in the inner column. And then I will deduct the related expenses. And then net amount will come in the outer column. Okay. So this point is a simple point. See, I have already done the presentation. Look at this. First, my rent is 5,000 per month. So multiply by 12. That comes to 60,000. And then see, when you deduct the expenses, don't deduct it casually. You have to make a formal atmosphere. Deduction under section 57. It is compulsory to write this statement. Which statement? Deduction under section 57. Then write whatever is given in the question. It's not necessary they will give you repair expenditure. They can give anything. And you don't have to bother much. Once you feel the expenditure is connected to my rent income, you can deduct it. And see why it is a connected expenditure? Because see, only if I repair my plant and machinery on timely basis, I will be able to generate rent income. And if I don't maintain my machinery properly, how will I get the rent? So it is connected expenditure. And obviously they will always give you some connected expense. But in real life, people try to show some unconnected expense also. Because people want to deduct anything and everything so that the income becomes less and the tax is less. But income tax department, these people are very smart. Whenever they see something you have deducted, they will check is it related or not. For a student, it is not a botheration because for a student, they will always give you related expense only. But in real life, they have to check that anything and everything you cannot minus just because you have incurred expense, simply minus. It's not like that. The expenditure should be related to the income. So here my income is rent of plant and machinery. So this repairing is of plant and machinery only. So it is related. So you can minus. But while deducting, you have to write deduction under section 57. And the net amount will go to the outer column. Okay. So this is a basic rule. Now, I'll go to the second example. Now you will find something new. Try this. In the question, they will give you say agricultural income, for example 5 lakhs. And they will give you some expense. And let's assume the expenditure is connected with agriculture only. Okay. Now, firstly, agriculture income, you have to always check whether it is in India or it is in foreign. Because only if it is in India, it is exempt under section 10(1). But if it is foreign land, it will be taxable. So, if problem is silent, you can always assume it is in India. So, assume it is in India, so it will be exempt. So, now what to do? What about these expenses? Yes. Since the income is exempt, do we put the amount or we put the dash? Yes, last lecture I didn't say if the income is taxable, you put the amount. If it is exempt, we put dash. And this is an exempt income. And being an exempt income, I am going to put a dash. Dash means I am not writing the amount only. So when I am not writing the amount only, so obviously I will have to ignore the expenses. In fact, I am not even writing the amount of income. So when income itself is not written, why will I write the expense? But see, some students get carried away. As soon as they see expense, they see, oh, I will have to deduct, I will have to deduct. And what they do, they take 5 lakhs in the inner column, they deduct 1 lakh and they write outer column 4 lakhs. And they suddenly realize, oh, this was exempt. But see, why to do such mistake? First, you should realize, once you come across some exempt income, simply ignore the expense. The paper setter will deliberately give you expense to confuse you. But you have to be smart enough that this income is exempt to hell with the expenses. So I should actually ignore this expense. See, I put a cross mark. And how will be the presentation of the agriculture income? I will write here agriculture income and in the outer column I will put dash. And in bracket I will write exempt under section 10(1). Okay. So see, I have shown here already. Correct? So in short, see, at the beginning I said that whenever some expenditure is there, you have to deduct from the related income. But that policy of deduction you have to follow only if the income is taxable. If the income is exempt, ignore the expense. Okay. So see, 2 rules we have set in 2 examples. Taxable income, deduct the expense. Exempt income, ignore the expense. What did I say? Taxable income, deduct the expense. Exempt income, ignore the expense. But don't think sir has taught something special about agriculture. See, this point doesn't talk something special about agriculture. The point is not of agriculture. If the income is exempt, let it be agriculture income or some other income. Agriculture was just an example to teach my students. But don't buy it. Oh, sir has taught something special about agriculture. See, it's not about agriculture. Anything. If it is exempt, put dash. Ignore the expense. Similarly, in my previous example, although I took the example of rent, but I didn't mean to talk something special about rent. What I meant to say, if there is some taxable income and some expenses are given, deduct it. Now, whether it is rent or dividend income or any income, let it be. Rent was just an example. Okay. Similarly, here agriculture was an example. So what did I say? Total 5 rules we are going to set. 2 rules which we have set is taxable income, deduct the expense. Exempt income, ignore the expense. Now try this one. Example 3. Winnings from lottery, and then there are expenses on lottery tickets. Now tell me, winnings from lottery is taxable income or exempt income? It is taxable income. And as per what I said right now, taxable income, deduct the expense. So what you would do? Taxable income. So first you will write the amount of 1 lakh in the inner column. And then there are some expenses for purchasing lottery tickets. You know, when you win the lottery, first you have to purchase lottery tickets. There are lottery tickets, and luckily you win the lottery sometime. And sometimes your money goes waste. So here he has won the lottery, but for that he had incurred 5,000 expense. So usually what the student will do, he would deduct 5,000 and the net amount 95,000 you will write in the outer column. But this is wrong. Winnings is an exception. For winnings, even if you incur expense of 10 rupees also, government does not allow you deduction. Reason I will tell you, but the rule is winnings is taxed on gross basis. What do you mean by gross basis? No deduction of any expenditure. Gross means you have to keep it gross 1 lakh. You are not allowed to minus any expenditure. Although you will feel, no, I purchased a lottery ticket, that is why I got the winning. It is a connected expenditure. The 5,000 expenditure is related to lottery only. Although it is related, but still government doesn't give you deduction. Can you guess why? So reason is what you know. You might feel that this expenditure is related with winnings. But see what law says, you have won lottery not because you incurred the expense, because you were lucky. Your winnings is connected with your luck and not with the expenditure. See, if winnings would have come, if lottery would have come by incurring expenditure, everyone would purchase the lottery tickets. Even I should start teaching in the class. I should just go and keep buying lottery tickets. If by purchasing a lottery ticket, if by incurring the expense, there is a certainty that I will win the lottery, then why to take the hassles of starting a coaching class? So see, it is not because of expenditure you are winning the lottery. You won the lottery because of luck. So it is connected with your luck and not with your expense. And what law says, if your income is connected with expense, connected, then you minus connected expense. But lottery winning is not connected with the expense. Although you feel, no, but sir, expenditure is for buying lottery only. See, expenditure is for buying lottery. People buy many lotteries, but everyone do not win lottery. Lottery comes out of expense of luck. See, in my Hindi batch I say, it has got kismat connection and not kharcha connection. Lottery doesn't have kharcha connection. Kharcha means expense connection. It has got kismat connection. Kismat means it is your luck. Okay. And one more thing. See, government says there are some incomes for which you have to put hard work. You have to spend. Then you are able to earn. But tell me, in lottery, what hard work you have to put? What spending you have to put? Nothing. See, for example, to generate fees in my coaching class, I have to put hard work also, and I have to put investments also. I have to incur so much, and I have to put hard work. Then only I am able to earn. But for lottery winnings, the perception is of government is what? You are getting income free. Free in the sense you didn't put any hard work. It was mere luck. No hard work, mere luck. Not, you don't have to you put huge investments also. Lottery ticket hardly comes for 10 rupees, 20 rupees, 50 rupees. See, this 5,000, you might have purchased so many lotteries. And then luckily, one lottery was a winning lottery. So since lottery income doesn't come due to hard work or expenditure, it comes because of luck. Government says we don't want to allow you this deduction. And anyways, it is not a big expenditure. To win a lottery of say 2 lakhs, 5 lakhs, 1 crore, you hardly incur some expenditure. But government says we will not consider that. And when you also get the income easily, Government is also becoming greedy. We also want the tax. See, if a person has to put a lot of hard work, then government has sympathy also. Oh, you have put so much hard work, so much expense, then you are able to earn, then government is allowing you to net off also. But here hardly some hard work is there, it is a mere luck. So government said don't feel bad, expenditures connected with lottery will not be allowed. See, it is not just about lottery, huh? There are so many winnings. Like you win in horse race. You know, in horse race, what happens? There are various horses running in the race, and you have to bet. Horse number 3 will win. Horse number 7 will win. And while you place a bet, you have to incur some expenditure. That I place a bet of 100 rupees, I place a bet of 1000 rupees in horse number 5. So when you place a bet, you have to spend. But see, many times, this way many people keep betting on the horse, but they lose the money. But if someone wins, it is not because he has placed the bet, it is because he was lucky. So in short, the bottom line is this income has connection with your luck and not with your expenditure. That's why ignore the expense. Just a moment, he has got some doubt. You were raising hand. Okay, fine. So tell me, how will be the presentation of this thing then? Winnings from lottery, I will simply put it in the outer column. And expenses, I will ignore it. Okay. But see, this point was specifically for winnings. Huh? See, in the previous point, what did I say? See, it's not about agriculture. Whenever any exempt income, ignore the expense. In the first example also, what did I say? See, it's not about rent. Whenever any taxable income, deduct the expense. But the example 3, this is dedicated to winnings only. That for winnings, whether it is winnings from lottery, horse race or any type of winning, gambling, etc. If you get some winnings nature income, then the connected expenses are ignored. Okay. So I will put a cross mark on this because you have to ignore expenses, and then the presentation would be simply write the winnings in the outer column as fully taxable. Fully taxable means full amount will be taxed, no deduction. Okay, then this was third example. This way we have to learn 5 examples. Total 5 points are there in section 57. Okay. Try this now. Even this example is specially something for dividend. Huh? It's not that dividend is just an example. This point which I am going to explain, it is specially for dividend. First, without what I am going to explain, without the knowledge of that, try on your own based on what I have taught you. Right now, what did I say? If some income is taxable, then you can deduct the expense. So, dividend income is taxable. Dividend is taxable or exempt? Dividend income is taxable. It is the first alphabet in DW, Ramu, Fakir, G. So, it is taxable income. So, being a taxable income, what you would do? Whatever expenses are given in the question, you will minus. Okay. See what expenses are given in the question. Let us see. Bank charges. Why bank charges? See, usually when you get dividend from the company, you get in the form of a check. And that check goes to my bank account. And you know what bank has to do? They have to collect dividend from the company and deposit in my account. For example, I got dividend from Reliance. So what my bank will do, they will collect dividend from Reliance and deposit in my account. And for that services they charge. That is called bank charges. This comes automatically as a debit in our passbook, bank statement. Okay. So there are usually bank charges in dividend income. And what is this thing? Interest on loan to invest. How come this is an expenditure? See, why you get dividend? Because you invested in shares. Dividend is an income from shares. But you have to invest in shares. But to invest in shares, you need money. So you might have taken that money on loan. So see, this loan means what? I have taken loan from someone to invest. And if I take loan, I have to pay interest also. So on one hand, by investing, I am getting dividend. And on the other hand, there is a loan on my head. On that loan, I have to pay interest. So can you feel there is some income also and expenditure also? Income is in the form of dividend because I invested in shares. So I am getting dividend. But to invest, I had to take loan. On loan, I have to pay interest. So that becomes my expenditure. So these are all connected expenditure. So usually what you should do, dividend income, first I will write it in the inner column. And then my expenses, 1000 bank charges, then interest on loan. See, interest on loan you have to pay, huh? You have taken the loan, so whenever you take loan, you have to pay interest. So you will minus this, and what will come in the outer column? 73,000. This will be the net amount of dividend. This is the way you will do. Look. Okay. But this is wrong. Why you know? Because there is one special point for dividend income. For dividend income, you know what law says? You will not get any deduction. You will get only one deduction, that is interest on loan, and that too maximum 20% of your dividend income. What did I say? Repeat. In case of dividend income, you will not get any deduction for expenditure. You incur this expense, this, that, anything. Any expenditure you incur, you will not get deduction. But you will get one deduction, and that is only in respect of interest on loan. In case you have taken loan to invest in shares, on that you have paid interest, that is the only thing which you can minus. And that also, there is a limit. What limit I said? Did you hear? Maximum 20% of a dividend income. Why it is like this? I will tell you the logic. See, as I told you in the last lecture, you should know the reason for everything. Why? See, just because it is a rule, you cannot by heart. Many students think like this only. Income tax is a law. Law is a rule. So we have to by heart it. Why? There is always a logic behind the law. Okay. So law has not come up suddenly. The lawmaker has got some line of thinking. So you should know why the rule is special for this. I will tell you the reason. But first, for the timing, let's go mechanically. As per what did I say? That for dividend income, you cannot minus anything except interest on loan. So see, this I will cancel. Wait. Bank charges not allowed. Are you seeing my language? For expenditure, my language is allowed, not allowed. And for income, my language is taxable, exempt. So bank charge is an expense. So see the way I am saying, it is not allowed. See, for me it is very used to, because I keep teaching tax since 25 years. But for you it's a new subject, so you should learn the language also. And notice how I am saying. Okay. So for bank charge, what did I say? It will not be allowed. Means government will not allow you to minus. Okay. Yes, interest on loan, government will allow. But that also, what was the limit? 20%. So do one thing, calculate 20% of your dividend income. So 20% of that comes to 20,000. And this is maximum. Maximum means at the most you can minus 20,000. That means if you are actually spent less, then less. But here what is my actual amount? 26,000. Oh, this is too much. Limit means limit. You cannot cross the limit. And our limit comes to 20%. That comes to 20,000. So this amount will be restricted. Look. This amount I will cancel. And I will restrict to the limit of 20,000. And if I get deduction of only 20,000, then in the outer column, what will be the amount? 80,000. Yes, this, oh, I have already written 80,000. Okay. So outer column, 1 lakh minus 20, it will come to 80,000. Okay. Now why? Wait, first one more thing. How did I calculate this 20,000? Yes. 20% of dividend income, correct? And 20% is the maximum limit. Now tell me, maximum means what? Not more than that. What if the amount is less? Means this amount, look at this. What if this 26,000 would have been only 6,000? What if this would have been 6,000? Then 6,000 only. Then obviously then government will not say, no, deduct 20,000. Why 20? If I've incurred only 6,000, then means I'm saying instead of 26,000, what if this would have been 6,000? Then only 6,000 I will minus. Means if it is less, take less. But if it is too much, then stick to the limit of 20%. Here purposely I had taken an amount which is higher so that you understand the importance of the limit. So what is the logic of this? That you are not getting any deduction. You are getting only one deduction. That too interest on loan. And that also subject to limit. Maximum 20% of dividend income. Why? See, firstly, after listening to this rule, a person would feel happy or feel bad. See, you have to think from yourself. Imagine you are earning the income. You will feel bad or not? You should feel bad. Because a person would think, I have earned dividend of 1 lakh, but I have incurred expenditure of 1,000, 26,000. My expenses were 27,000. But I am not given full deduction. See, if you get full deduction, your income becomes smaller. Smaller the income, smaller the tax. You love to have a smaller income, smaller tax. See, you want to earn more. But for taxation purpose, you want to reduce it as much as possible so that your tax is less. But your government says, no, sorry. We will not allow you to minus this bank charges. Wait. And even this amount you can minus, but maximum 20%. There is a limit. Now why? See, there is always a logic behind the law. So what is the logic behind this? Think. I know you will not be able to get the reason, but if you have the habit of thinking, one day your brain will be developed in such a manner that automatically you will come to know the reasons. Your mind will be tuned to logical thinking. So see, what is the logic behind this, Dividend income is income of rich people. First agree with this, then only I can proceed ahead. What did I say? Dividend income is income of rich people or not? Yes. Tell me, does a normal middle class or a lower class person will have dividend income? See, as a student, imagine if you are a middle class person, you heard about dividend income. But actually who earns dividend income? Rich people. Why rich people? Because dividend comes from shares and everyone do not have the daring to invest in shares. See, a middle class person has got hardly some income to survive. So he cannot invest his income in shares, because in share market, in stock market, there is a risk that your money will get lost. So that risk appetite, normally a middle class person doesn't have. Only a rich person will think, at the most what will happen, whatever I invest in shares, my money will be lost. He can bear the loss because he is a rich person. So do you agree dividend income is an income of rich people? Yes. That's the reason. So government says dividend is usually earned by rich people. So let's try to make maximum from rich people. And rich people don't bother to pay tax because they have got lot of money. So government says you are rich person, so you can pay tax. Why you want this deduction, all that? No need to give you deduction, and don't feel bad. You are well-to-do person, you are getting sufficient income. At least you can do something for the country. Do something for the country means pay tax. If you also come and say, no, my dividend income, I have got so much expenditure, I want to minus, then this way your income will become small. And we want to take maximum tax from rich people. Okay, so that's why government says, anyway, this is the income of a rich people. A rich person wouldn't mind if we don't give him deduction and if we tax him on the full amount. But see, although we say dividend is the income of rich people, but this rich people use risk also by taking loan. So that loan is respected. See, imagine if I am a very rich person, so I am very much confident in investing in share market. I can invest, but rich people, they also take big risk of taking loans also. They take the loan also. They have the daring to take the loan. So they have to respect that daring also. When they have the daring, they have got the guts to invest in a share market, You have to also respect the daring of taking the loan. See, if he has not taken the loan, if he has invested his own money, then government will have zero pity. Then the government will say whatever dividend you earn, pay tax on that. But if for earning the dividend, if you have taken the loan, we respect that. Because although we have in our eyes, rich people have got so much income, but they take loan also. See, you calculate 20% of this amount, and then this 26 is there to compare. And why do we compare? Because we want to see if the 26,000 amount, what if this is only 6,000? Then 6,000 only you minus. See, minusing you have to do from 1 lakh. Don't forget, you are minusing from 1 lakh. But the question is, should I minus full 26 or 20? Means full 26,000 or 20,000. That depends. If my 26,000 is lower, then minus that same amount. Say 6,000, 5,000, then same amount. But our example 26 is too much. Then I will deduct the limited amount. If you want, you can make a formula. Either this limit of 20%, which in my example comes to 20,000, or the actual amount of the question, whichever is lower. So that formula will always work. So what is lower in my example? 26,000 or 20? 20. Then I will minus 20. And what if this amount was 6,000, not 26, it was say 600 only. Then 600. But 600 you will minus from 1 lakh. Okay. So this was about dividend income. So see, this is example 4. See, at the beginning, what did I say? In the theory of deduction under section 57, there are 5 points you have to remember. First point was a general point. Any taxable income you find, deduct the related expense. Exempt income, ignore the expense. Winnings also, ignore the expense. Winnings doesn't come from hard work or expert, it comes from luck. So ignore the expense. Dividend, deduct only one expense. Dividend and mutual fund income. Dividend and mutual fund income, deduct only one expense. That is interest on loan, and that to maximum 20% of a dividend income. And maximum is not more than that. If the actual amount is less, then less, whichever is less. Okay. This was example 4. Then example 5 is something about family pension. See, if you remember last lecture I said family pension, if it is received by an employee, received by the family of an army employee, then it is completely exempt under section 10, 19. Because we respect army people who lose their life in armed forces. Okay, we respect that. But imagine if an employee was not working in army. Okay, he was a normal employee and he died. And after his death, family is getting the pension. Then also government has got some sympathy. And out of sympathy, you know what government says? Whatever family pension that wife might have received after the death of her husband, 1/3 of that will be free from tax. 1/3. Fixed rule of 1/3. Reason? Sympathy. What kind of sympathy? Imagine that poor wife, how bad she might be feeling. Her husband died. Her husband was not an army employee, but whoever he was. After the death of husband, if the widow wife, if she is getting pension, anyone would have sympathy. So even government is expressing sympathy for all the widows. And what sympathy? That if the widow gets the pension after the death of her husband, she will not be taxed fully, she will be given 1/3 deduction. Because government has to consider what that husband died. Now wife has to run the whole family. So she will have more expenses now. It will be difficult for her to survive. See, until the time husband was alive, he was earning and feeding the family. But now husband is no more. So don't you think the wife will have a tough time? So considering that, government says, don't worry wife, if you have got 60,000, we will free from that 60,000 1/3. Find out 1/3 of 60,000. That comes to 20,000. But here also there is a limit. Maximum 15,000 deduction we are ready to give. See, actually government, one hand they are saying one third is free, one third is free. But then government said, but it should not be more than 15,000. Huh? Because we don't want to free the amount so much, because if we keep freeing the amounts, how will we get the tax? See, government is little greedy also and little sympathetic also. Sympathy, that's why government is considering to give some deduction. But government says that we don't want to get so much emotional that if someone is getting a pension of 6 lakhs, so one third of 6 lakhs will be 2 lakhs. 2 lakhs will be free from tax? No. We have a limit, maximum 15,000. And if someone says, why limit? See, everyone has got a budget or capacity. So government's capacities, we are not going to help more than 15,000. See, for example, there is a poor child. I feel like helping him. But see, I also have my limitation. Even I might be a poor person. So whatever is my capacity, I feel like donating that child 1 crore. But I have only 10 rupees, so I will give him 10 rupees. So similarly, government also feels that wife should be given full sympathy. But then government says we have a limitation, at the most 15,000 deduction we can give. Because if we give full one third, then some people might be getting 10 lakhs pension also after the death of the husband. So 10 lakhs one third will be too much. So we don't want to free your amount beyond 15,000. And whenever government puts a limit, automatically becomes a formula of whichever is lower. So here you know what will be the formula. Look, from 60,000, first you will find one third. That comes to 20,000. And 15,000 is a fixed amount. See, this 15,000 which I have been saying you have to by heart, it is not just a casual amount I am saying. 15,000 is fixed. One third is also fixed. By heart it. One third, 15,000, 15,000. There are two things. One third and 15,000. But then one third should be given importance of 15,000. Whichever is lower. You should say whichever is lower. And see, out of 20 and 15,000, what is lower? 15,000. So what I will do, from 60,000 I will deduct 15,000, and in the outer column I will write 45,000. See, I will show you in a better way. Look here. First, family pension I will write it in the inner column. Okay. And then calculate one third of that. See, one third can be any amount. Huh? See, this 60,000 is my example. I hope 60,000 you are not by hatting. This 60,000 can be 6 lakhs, 2 lakhs, 1 lakh, 5 lakh, 40,000, anything it can be. It can be say 30,000 also. Whatever is the amount given in the question, you calculate one third. One third is fixed, look. And this 15,000 is fixed. So these two amounts you have to calculate. One third, which in this example comes to 20,000, and 15,000. Out of the two you have to select whichever is lower. See, can you see the symbol of arrow? See, whenever an arrow goes down, it represents whichever is lower. See, and many times I will use this symbol. Look at this. Arrow going up. So that means whichever is high. But here it is whichever is high or whichever is less. Whichever is less. And the logic of less is government wants to give as less as possible. Because if government gives you full benefit, government will not get tax. And if government doesn't get tax, how will they run the country? Okay. So this formula you have to by heart. And you know, this is called standard deduction. In the language of income tax, we call it as standard deduction. See, standard means fixed. See, actually law has standardized. What do you mean by standardize? To fix it. And see what government says. Any wife in this country, if after the death of her husband, if she gets family pension, we have standardized. One third we will deduct, or 15,000, whichever is lower. That much will deduct, and only the balance amount will be taxable. So this is standardized for the whole country. Okay. So that's why it is called standard deduction. To standardize means to make it as a fixed rule. And see, Once family pension comes in the question, they are not going to remind you, dear student, don't forget that one third. Huh? They will not tell you in the exam. As soon as you look family pension, automatically that formula should come to your mind. Which formula? One third of what should one third of actual amount received. See the language. One third of actual amount received, that will be given in the question, or 15,000, whichever is lower. This is a fixed formula you have to use, okay? But see, this is for family pension after the death of normal employee or army employee? Normal. See, if army employee dies, then the family members get full on sympathy. Then they don't have to pay tax. Even if the family members are getting 10 lakhs pension, tax free, under section 10, 19, okay? And see, it is not necessary that always husband dies and the wife behind gets the pension. It can be vice versa also. How? Wife was doing the job and wife suddenly died. And after the death of wife, husband is getting the pension. It can be that way also. But see, casually I might have said that after the death of husband, wife is getting the pension. It's not necessary always that husband's death, wife is getting the pension. It can be vice versa also. That wife was doing full job. Husband was house husband. Husband was house husband, cooking food at home, and wife was doing job. And wife died. And after the death of wife, the husband is getting the pension. The rule is same. Okay. And it's not necessarily husband, wife. Any family member gets. Sometimes a person has died and his wife is also not there. His child might be getting. The word family means the person who was doing the job died. And now the family is getting. Now family can be, obviously mainly it is wife only, or it can be a child also. When family members get the pension, the rule is like this. Okay. So this was fifth point. So 5 points are over. So can you tell me the summary? Summary 1, 2, 3, 4, 5 points. Taxable income, deduct the expense. Exempt income, ignore the expense. Wait, I'll say in a proper way. Taxable income, deduct all expense. All expense. Exempt income, ignore all expense. All expense. Winnings, ignore all expense. All expense. Dividend, deduct one expense. Dividend, deduct only one expense. That is interest on loan to invest in shares. And that too limited to maximum 20% of dividend income. Dividend or units income. See, this units income is units of UTI or mutual fund. Okay. And then family pension standard deduction. 1/3 or 15,000, whichever is lower. See, in income tax, it's all about remembering this thing. It is just, this is a simple chapter, so there is less of remembering. And when you go to a bigger chapter, there will be more of remembering. But you will never find a challenging understanding. I guarantee you, you will understand everything with concept and logic. But I cannot guarantee you that you will remember everything. Because remembering is more in your hand. Although it is in my hand also. That's why every lecture I will have the take up. But to some extent it is in my hand. But majorly it is in your hand to remember. And only if you remember everything, you can succeed. Regarding understanding, don't worry. Everything I will make you understand with the logic and concept. Okay. So see, read this thing. Taxable income, deduct all expense. Then exempt income, ignore all expense. Winnings, ignore all expense. Dividend and units income, deduct only one expense. Interest on loan, maximum 20% of the dividend income or mutual fund income. And lastly, family pension standard deduction, 1/3 or 15,000, whichever is lower. Okay. Now after this, we are left with the theory of gift. Okay. But see, before I take up the theory of gift, I would like to take one question so that you are comfortable with this deduction and whatever last lecture we have learned. See, up till now, according to me, student has to mainly buy at this thing. Although the keyword was big, D, W, Ramu, Fakir, G, But the remembering item is this only, no? That these are exempt income which you have to remember. So this is first most important thing of the chapter, and the second most important thing is this. These 5 points which you have set right now. And this knowledge you will use when whenever there is expenditure given in the question. Okay. So with the help of this one knowledge, let us solve one question and then we can proceed on to gift. Okay. So take out question number. Question number 2. Ready everyone? Okay, see, this is the question. Read the first line. Mrs. Khanna furnishes following details. Then what is written? Calculate her taxable income from other sources. So tell me what will be there in the answer. See, in income tax, your answer is always in the form of a statement. In accounts, what we do, you have to prepare some account or the other, or say balance sheet sometimes. But in income tax, it is always a statement which you have to prepare. And since it is income from other sources, the name of the statement will be statement of income from other sources. See, your answer will look like this. Statement of income from other sources. There will be one particulars column, and then one inner column, and then outer column. This is the format of our answer. Okay. So this will be there. Now, usually see what happens. Usually student has to read the full question first. Okay. See whether it is accounts or tax, whatever. Normally what we do, we read the whole question first. But here to save the time, what I will do? We will not read the question. Because even after I read the question, in the answer, what I have to do? One by one, I have to give the effect of all points. And there is no format. As soon as any point comes in the question, I have to give effect in the answer. So see, first reading the whole sum and then start solving, it will consume our time. So to save the time, what you are doing, keep one statement ready like this. In your notebook, keep one statement ready like this, and then one by one we will give the effect of each point in the statement. Because there is no format for this. Look, there is no particular format for this. Here you have to prepare the list as per the question. So we'll read the question one by one, we will give the effect. And what is the rule for giving the effect? If something is taxable amount, if it is exempt dash, and if some expenditure comes, then you have to minus. But then minus, the rules of minus, taxable income, deduct the expense. Exempt income, ignore the expense. Winnings also ignore the expense. Dividend, deduct only one expense. Family pension, standard deduction. So these rules we will follow. Okay. So do one thing. So to save the time, we will not read the question first. Keep the statement ready and we will read and simultaneously start solving. Prepare a statement like this. And have the habit of presenting everything very neatly. Because the better you present, the better impact it has got in your memory. After all, the challenge of every student is what you have to remember everything. CA is not tough. The syllabus is vast. And the vastness of the syllabus makes it challenging to remember everything. So when the main task is about remembering only, use the techniques of remembering. The better you make your notes, the better you will remember. Any work you do, you have to attach your feelings. See, for example, if I have the feeling to care for my students and if I try to teach, I can teach better. Because in my teaching, feelings are involved. Similarly, when you are also making your notes, when you are solving the sum, you have to do it neatly. Because in that process of neatness, you are attaching your feelings. And once in your work, feelings are attached, there comes effectiveness. I follow one equation: work plus feelings is equal to effectiveness. But work without feelings has got no effectiveness. And for a student, feelings means do it neatly, nicely. And at home, when you study everything while you are sleeping, just pray your books and sleep. That is also attachment of feelings. And while praying, you have to simply say, "Hey God, please make me pass in the first attempt only with both groups and rank." At least you can pray that. Then whatever is destiny, that will come automatically. Are you listening or ignoring me? So ready with the statement. See, there are two columns here. Rupees column, amount column, inner column and outer column. Ready? Okay, then let us start one by one. Read the first point. Interest on bank deposit. Now, interest income, try to recall the theory. Tell me, what did I explain? Whenever you come across interest income, you should search in GPS. If the interest is from GPS exempt, what is the full form of GPS? Gold bonds in a tune. Gold bonds, POSBA, PPF Sukanya, gold bonds, POSBA, PPF Sukanya. Is it gold bonds, POSBA, PPF Sukanya? No. Then taxable. And if it is taxable, dash or amount in the direct outer column. So right, see the way I have written, look here. Show like this. See, for a design you can do this. This is not compulsory, just decoration. This thing which I have done, this asterisk mark, putting a star or a bullet. Yes, you can put numbering also, 1, 2, 3, 4 like that. Whatever is comfortable. And even that is not necessary. It is just for your understanding. You understand that how many points you have written. So my way of pointing out is this asterisk mark. So interest on bank deposit, 14,000 directly outer column because it is fully taxable. Okay. Then try second. Agriculture income in China. Oh, China means India or foreign? Foreign. So it will be taxable. Okay. And then expenses are given. So today what were the 5 points? Taxable income, deduct the expense. Exempt income, ignore the expense. Winnings, ignore the expense. Dividend, deduct only one expense. Family pension, standard deduction. Keep repeating that. Okay. So this is a normal taxable income, deduct the expense. Okay. Tell me the presentation. First you will write agriculture income in the inner column. Then what you will write? Yes. See, many students, what they do, they write less exemption. See, when you minus some expense, don't use the word exemption. See, what is the difference between the word exempt and deduction, Deduction word is used when there is some expenditure. And when to use the word exempt? If there is some income. It is used for the income. If some income, government says, oh, you have got this income, don't pay tax. Don't pay tax. When income is freed from tax, then we use the word exempt. But here, once you see the word expense, don't use the word exemption. Exemption word is restricted for incomes which are not taxed. But this is an expenditure, so you have to write the word deduction. See, right now you don't realize this, but many students, casually in longer run what they do, they write anything, whatever they want. and this way marks are deducted. So you have to write deduction whenever the word expense. See, in my notes also, I don't think you noticed that thing. Look here, see. When I started the lecture today, see, I had highlighted it, expenses. So it is only when there are expenses we have to use the word deduction. So let us write agriculture income in inner column. See, I have written here agriculture income, inner column 1,45,000. You write fully, I have written dot 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 means I have not written that in detail. In China. See, regarding wordings, you don't take any tension. There is no law that you have to write this language, that language. Whatever appears in the question, copy that same thing. Agriculture income in China. So copy that 1,45,000 in a column. Okay. Then see what I have written. Less deduction under section 57. Less deduction under section 57. Wait, after that you have to write the name of the expense. See, after the word deduction under section 57, you have to write the name of the expense. Here, they have not given the name of the expense. They have just written expenses. So, you also write expenses. But actually, look, here you have to write the name of the expense. Like in that example of rent of plant and machinery, repairs was there. So, this deduction is the heading. Below that, you write the name of the expense. And sometimes there can be 2-3 expense. See, for agriculture, they can give cultivation expense, harvesting expense, seeds, etc. They can give 5-6 expense also. So you have to make a list like this. But here they have given only one thing, that also expenses. So write like that only. So outer column 1,20,000. Then next thing in the question, rent from letting of a building along with plant and machinery furniture. You know, feel these words, feel this. Along with. You didn't feel the word along with. See, last lecture I told you whenever building plus other asset, you find it combined, it becomes a composite rent. Composite means combined. Okay. But see, combined means not any combination. Huh? What if it was like this, rent of plant and machinery, computer, air conditioner, etc., etc. That is not composite. Building plus other assets. See, there has to be building, then only composite. And why the importance of building? Because building means it's a structure of 4 walls and a roof, which is actually categorized under different head, income from house property. But in that other assets are mixed. So building loses its identity. It doesn't go to house property. It comes to Ifos. So see, many students what they do, whenever they see the group of asset composite, it's not like that. Building plus other asset, that combination should be there. Just because there are multiple asset, it doesn't mean it will be composite. There has to be building plus other asset. So you also do one thing, you can do this thing in your question, circle building and along with means plus. So this is a sign of composite rent. Building plus plant and machinery furniture. And see, for rent income in D.W. Ramu, what did I say? All the rents are fully taxable. In our theory, there were 3 rents. Rent of other asset, rent from subletting and composite rent. So this is composite rent and it is taxable. Wait, now read properly. Rent from, what do you mean by letting out? To let, no. See, if they write the word let out means it is simply to give on rent. But when they write subletting, see when the word sub and then comes letting, then it is a rented thing given further on rent. But here have they written the word sub or only letting? Only letting is a general word to give on rent. For example, I have got something which I give on rent. So give on rent means to let out. See, let means to let someone use it. You use it. I will let someone use, but give me my rent. Okay. So letting is a general word to give on rent. Okay. Yes, if it is subletting, then it is a rented thing again given on rent. Okay. Anyways, that also comes in income from other sources. So rent from letting of building, blah blah blah. Plant and machinery, furniture fitted therein. Fitted therein means furniture, plant and machinery, everything is fitted inside the building. Okay, and the rent is how much? 20,000. Always check, is it per month or not given as per month? Not given as per month means it is per annum only. It is for the whole year. But then see, depreciation on building, furniture, etc. Insurance premium paid. You know this word paid, depreciation, this gives you the feeling of expense. And whenever expenses come, you should be reminded of those 5 points of deduction under section 57. Repeat those 5 points. Taxable income, deduct the expense. Exempt income, ignore the expense. Winnings, ignore the expense. Dividend and mutual fund income, deduct only one expense. Interest on loan, maximum 20% of dividend income or mutual fund income. Family pension, standard deduction. 1/3 or 15th on whichever is less. So here it is what? Rent is a normal taxable income. And taxable income, deduct the expense. So can you tell me the presentation? First you will write the rent of 20,000 in the inner column. Then you will minus. Okay, then you will write deduction under section 57. What you will minus? Depreciation 6,000 and insurance premium 1,000. Okay. But yes. See, some students say depreciation is a non-cash expense. See, it doesn't matter. See, depreciation in accounts you are taught it is non-cash. But actually depreciation also is an expenditure because you incur the cost. And cost of the asset, you have spent money. So see, in accounts you are just taught like depreciation, non-cash, but actually even depreciation has involved cash. You calculate depreciation on what? On the cost of the asset. And to incur the cost you have paid money. So eventually it's an expense. But see, you cannot deduct the full cost of asset. It becomes a capital expenditure. See, rent you are getting one time or year to year? Year to year. But the cost of asset is incurred one time. So from the rent income, which is recurring, which you get year to year, you cannot deduct the full cost. That's why on the cost we take depreciation. But by way of depreciation, we are deducting some portion of the cost. And cost you cannot say is non-cash. Cost is a cash expenditure. Okay. See, it is just for accounting purpose. We casually say depreciation is non-cash. Yes, depreciation independently it's a non-cash. But if you see the root of depreciation is on the cost. And for cost we have spent money. And when you have spent money, obviously you will want deduction. And in income tax you always die for deduction. Because if you get deduction, your income becomes smaller. Smaller the income, smaller the tax, happy feeling. Okay. So depreciation also you can minus. Okay. And even insurance premium. But see, better to write like this. Look, see how I have written. It's better you write the word composite. See, even if you miss the word composite, it's okay. But since you know it's a composite rent, it's better you write. See, actually you can write like this. Composite rent of building plus other asset. I have written the word composite in the bracket, but you can start like this only. Composite rent. of building plus other assets. Composite rent of building plus other assets. So that is 20,000 inner column. You should be careful. If it was per month, I would have multiplied it by 12. Here also they play games, huh? They gave a date also. It was given on rent on 1st November. We are preparing this statement for April to March 23-24. What? This is a statement of 1 month or 1 year? And as I told you in the last lecture, we always calculate income for previous year 23-24. Although in the question this was not mentioned, but for CA inter students of November 24, it goes without saying the year will be 23-24. So tell me, if they would have said it was given on rent of on 1st November, then you will get the rent only from November. Then November, December, Jan, Feb, March, that comes to 5 months. Then if they would have given rent per month, so multiply by 5 months. See, these are basic rules we follow in accounts also. I'm just reminding you, but here don't worry, here firstly the 20,000 amount was not even per month. Even if per month, did they give when the property was given on rent? If nothing is given, that means it was given on rent from the beginning of the year. So that's why full year income we have earned. See, I'm just saying what extra can come in the question. Okay. Then after this, see with red pen what I have written. See, in exam you don't have to use red pen. But right now I am purposely using red pen for decorating the notes. Because see, the better your notes, the better is the impact on your preparation. Okay. Otherwise in exam you cannot use red pen. It's not allowed only. So less deduction under section 57. Can you tell me the name of the expense given the question? Depreciation and insurance premium. See my style of writing, look. I have prepared an arrow, then depreciation. Then again arrow, insurance premium. Amounts in the inner column. You can just write depreciation. Not necessary to write the whole statement. Depreciation on this, that. You just have to write the name of the expense. Then insurance premium. Yes. See, some students have a doubt that instead of writing minus sign, can we put bracket? Yes, you can do. See, these are very normal rules which we do in accounts, in tax also. To represent minus amount, you can put it in bracket also. That is also okay. Okay. So this is rent. Then done that thing. Next point. We have done 1, 2, 3. Then fourth point. Dividend from Indian company. See, this Indian company, foreign company doesn't make any difference. Huh? Sometimes they also give dividend from cooperative society. Once it is dividend income, it is taxable. But wait, expenses are given. Now what is the rule for expenses in dividend income? Deduct all expense or only one? Only one. That is interest on loan. Is this interest on loan? No. If someone says, sir, can't we assume? How can you assume? Expenses means it can be anything. Only if they write interest on loan, then it is interest on loan. But this is just an expense, so ignore it. You have to ignore the expense. So what to do with dividend? The full amount of 14,000 will go to outer column. Fully taxable. Okay. See how I've done here. See, whenever you ignore something, it is better you have to write a note in the exam. Now in the exam, after the statement, you can write a note, expenses related to dividend are ignored. But if you feel burdensome to write a note after the whole statement is done, you can write in the bracket also. Expenses are ignored. In bracket you can write. This way you can avoid the hassle of writing a note. Okay, then tell me, what if this was interest on loan, this 500 rupees? I am keeping it 500 only, and with this was interest on loan. So calculate the limit first. 14,000, 20% comes to 2,800. So 2,800 is maximum which you can minus. But my expense is only 500. Then I will minus 500 only from 14,000. Okay. Means 20% is the limit, and that's the higher limit. If the actual expense is less, then you will take the lower amount only, whichever is lower. Okay. But anyways, that is if it would have been interest on loan. Then what about next point? Winnings from raise. For winnings, what is the rule? What to do with expense? Deduct the expense or ignore the expense? Ignore. Ignore. Because winnings, does it come from hard work or mere luck? Mere luck. There is no hard work, there is no spending. People keep spending, but they are not lucky, they will never win. So winnings comes not from spending, it comes from luck. So this spending has got no connection, ignore it. So directly you will write the amount of winnings in outer column. See, 40,000. Then next, rent from land. See, in our keyword of D.W. Ramu Fakir, there were 3 rents. Rent of other asset, rent from subletting, composite rent. So this is rent from other asset. See, other asset means other than house. And house means 4 wall and a roof. But this is an open land. See, once they say land, it is an open land. And open land means there are no 4 walls, no roof. So it is not house. It is other assets. And rent of other assets is taxable. Okay. See, what if they would have given rent of house? Then you should write rent of house property is not taxable under the head Ifos. It will be taxable under income from house property. You have to write a note for that. Below the statement. Means then don't include that rent here. See, if rent of house if you include here, that means you are including it in income from other sources. That would be wrong. So if by chance they give you rent of house, then you will not include it in the statement. You will write a note below the statement. And in the note, what statement you have to give? Because it is the rent of house, it is not considered in the above statement. It will be considered in a separate statement, statement of income from house property. If that would have been house rent. But this is house rent or some other asset. Other asset. So this will come in income from other sources and it is taxable also. Okay. So write the amount. Tell me, what if this was an agriculture land? Then it is exempt. If you remember last lecture I told you whether you do farming in agriculture land or you give it on rent. If agriculture land you are having, the income therefrom is exempt. Some people themselves do the farming. Some people give it on rent. But if it is an agriculture land, it will be exempt. But it should be in India. So his doubt is what? What if this was an agriculture land? then I would have said exempt under section 10(1). Regarding India foreign, if the problem is silent, we can assume in India. But this is not agricultural land, this is a normal land, so it will be taxable. Okay. So rent of land 30,000. Then next point, family pension after the death of, wait, there is some printing mistake, it's not his husband. Question is of Mrs. Khanna. Mrs. Khanna will say his or her husband. After the death of her husband, who had been a member of armed force, army employee dying and family getting pension, it is fully exempt under section 10(19). But then today it gave you the formula 1/3 or 15,000. That formula you use when it is a normal employee dying and family member getting pension. This is a normal employee dying or army person. So it is completely exempt. You will not even write the amount, you will put a dash directly in the outer column. This 48,000, instead of that you will put directly dash. And what is the section? 10(19). See, you can write a full statement also as it is appearing in the question. I have written in short. Family pension after the death of her husband who was member of armed forces. You can write as it is. Tell me, if this was not member of armed force, then wait, what was the amount? No, what was the amount in the question? 48,000. That I would have written in the inner column. Then 1 upon 3 into 48,000, that comes to 16,000. Compare with 15,000 is a fixed amount. Out of the two, which is lower? And this 15,000 you would have deducted from 48,000. This way you would have done. Okay. But that is if normal employee dies and family pension is given. Then next point, come on fast. Next, amount received from LIC on maturity life policy. Who takes life insurance? The one who is worried about death. And death will remind you of D. That will remind you of 10(10)D. Exam under 10(10)D. See, sums are nothing. It is all about remembering. See, let me tell you, wait, take a hold for some time. See, in accounts, even after the theory is taught, you are curious in solving the sum because you will find some good points in the question, in accounts, FM, costing. But in taxation, sums are just following the rules. If you know the rules, you will not find any variety in the question. Yes, sometimes your question is framed in dangerous manner, but there will be no novelty because you have already studied the rules. And my strategy will be what you know. While I am explaining the rules, I will explain so thoroughly and I will make sure you by heart it. So that in the sums, you will not find anything new. See, you solve 1,000 questions of income from other source. You will not find anything new, provided the theory is thorough. Okay. So here, for example, you know, life insurance policy exam under section 10(10)D, that's already taught. So nothing new in the sum you will find. In short, in tax, once theory is done, the topic is in your control. See how I have written. Amount column, amount or dash, dash. It is fully exempt under section 10(10)D. Anything else in the question? That's it. All the points are done. So now you can total up. You have to total the outer column. Total up on your own. Don't see my total. Taxable income from other sources. See, for this question, my answer is done. But can you tell me, what do you do with this amount in real life? Please tell me, this is the most, Shreya not paying attention. What do you do with this amount at the end? Yeah, this, where, tell me exactly, where do you transfer it? Where? This you will transfer here. Where? Here. So what was the answer we got? 2 lakhs. So this comes here. And this way, 5 heads are computed. Okay. But right now you are not able to calculate this because these chapters will be taught separately. For each head of income, there is a separate chapter. But once you got this 2,31,000, this way you will learn this also one fine day. And then after you total up, there is something called deduction. Even that will be taught separately in one topic. And then on this amount you have to calculate tax at some percentage. And that percentage will also be taught in one topic. And that much amount you have to pay to government. And having the knowledge of income tax itself, you will feel proud always. Because this knowledge everyone requires. Okay. So question 2 we have done. Okay, now we can start the theory of gift. Okay, look at this now, look. See, gift, if you receive from an employer means your boss where you're doing the job, then it will be categorized as income from salary. Because see, whatever your boss gives you, it is because you are doing good service in the job. And because of your performance in the job, your boss getting happy giving you anything, it's part and parcel of income from salary. Okay. And then if you get gift from your customers, then it is income from business. Okay. So for example, a businessman, he is getting gifts from his customer. And why customers are gifting him? Because businessman is giving good service to the customer and customers are happy. So sometimes customer might give gift to the businessman. But that will come under which head? Income from business. I hope you are familiar with this word, head. 5 heads of income. So this will go to which head? Income from salary. This will go to which head? Income from business. But that is if it is from employer or customer. But if you receive some other gift, other means what? Other than your boss, other than your customer, like you get gift from your friends, relatives, etc., then it is income from other sources. And in income from others, so there is a rule, if you get a gift up to 50,000, it is tax free. But if you get above 50,000, say 51,000, it is fully taxable. Entire amount, it's not like that if it is 51, I will minus 50 and balance 1,000. No, entire 51,000 will be taxable. Once the amount crosses 50,000, full amount will be taxable. This is little unusual. Means if it is 50,000 or less, then exempt. Above 50,000 taxable. But now see, next question what you should get, why? So see, first I will explain a big concept that why gift is being taxed. Here firstly a person should revolt. Why tax on gift? Gift is not an income. Tax is on income. But gift is not an income. Do you agree? We are studying income tax. And income tax is the tax on income. But gift is actually not an income. Then why it is taxed? But first, let me prove that gift is not an income. See, be focused. First, I will make you explain that gift is not an income. It should not be taxed only. But then I will prove if it is not an income, then why government is taxing. So let us first discuss why gift is not an income. See that 50,000 rule you can remember. That is, by hearting is not a big thing. But understanding the concept is important. Tell me, why did I say gift is not an income? You know, income word has come from what? Earnings. Don't we say, I am earning the income, earning? And you know, when you call something as earning, when there is some give and take. If you give something and in return take something, you can say, I have earned it. Like for example, income from salary. Why salary is an income? Because there is give and take. What give and take? As an employee, you give your services, you perform job. So there is some give. And then in return you get salary. And only when there is some give and take, we say, I have earned it. See, receiving and earning are different. See, receiving, someone gives the money, I have received it. But that is not my earning. Earning, when do you say it's my earning? When I put my efforts, my hard work, then if I get something, I can say it is my earning. And only earnings become your income. In short, to call something as income, there should be give and take. And you will notice, every income there is give and take. Let us check all 5 heads, okay? In salary, there is give and take or not? Employees does job, he gives his service, then he takes salary. Then house property, income from house property, what do you give? You give your house to someone. So there is something give. And then you take rent. So there is give and take. So give and take is the important element to call something as income. Okay, now check. What are the 5 heads? What are the third head? Income from business. Like I am also doing business over here. So am I getting the fees free of cost? Or I am giving something? I am giving. I am giving services to my student. I am teaching, I am shouting, I am using my energy. I am giving. And then if I get the fees, it is my income. In fact, we call it my earning. I have earned it. Because I put my efforts. Then I am making you check all heads. Income from salary, house property, business, then capital gains. In capital gains, what happens? You sell the asset, you make profit. So when you sell the asset, you give away your asset. For example, I have got some gold or shares, I give it to someone. So there is some give. And in return, I charge the price. So there is give and take. Everywhere there is give and take. Even in income from others. So D.W. Ramu Fakir, dividend income you get when you invest in shares. So for every income there is something give and take. But gift is totally free. And if something is free, there is no give and take. There is only take and take. Tell me, if someone gives me gift, so gift has freely come. The person who has given me the gift, he might be loving me. But whatever he gave me the gift, did I give something? No. So there is no give. It is only take. So technically speaking, gift is not an income. See, this conceptual understanding is must. Many students don't bother. They simply by heart the rules. Gift 50,000 exempt. Above 50,000 taxable. But that is a mechanical approach. First you have to argue, gift is not an income. Why the hell tax on that? So do you agree it's not an income? Yes. So what is the definition of income? Is it something free or give and take? Give and take. But gift is not give and take. It is totally free. You have received many gifts in life. But when you get the gift, it is totally free of cost. You are not given something. So technically it is not my earning. It is not my income. It should not be taxed only. But then the doubt should come, why then government is taxing gift also? But see, government is also taxing when if the gift is above 50,000. But then why? So see, gift technically should not be taxed, but people used to do cheating. In past, people used to do cheating. Can you guess what kind of cheating? Exactly what cheating people used to do? Whenever a person used to have some income, he used to say, this is a gift. And in older days, gift was not treated as income, it was not taxed only. So to avoid the tax, what people used to say, even some income is earned, you used to claim, this is not income, this is a gift from my friend. I have got very good friends. Actually, he doesn't want to pay tax. Actually, it is his income. For example, I am getting fees of 50 lakhs from my students. But what I can say, this is just a gift from my friend. My friend loves me a lot. He gave me 50 lakhs. But actually, it is my income in the form of fees from students. So, people used to do cheating. What they used to do, whenever they wanted to avoid, evade tax on some income, what they used to say, even if it would have been income, they used to claim, this is a gift. So this type of cheating used to happen. And when this cheating happened a lot, government was frustrated. And what government said, to hell with your gift now. Now we will tax gift also. Every income we see, you say it is gift. And we are getting fooled. So now we will tax gift also. Because we don't believe in gift. Because every income you show it as a gift only. See, this is very easy to cheat. See, for example, I am getting some rent income also. I have given house to someone on rent. I am getting rent income. Every month I am getting rent of 1 lakh, 2 lakhs. But I will say I am getting gift. My friend is so loving, every month he gives me gift. But don't you think every month someone gives gift, it's not believable? So this used to happen, but government couldn't do anything that time. So that's why out of frustration what government said, now gift is also assumed to be your income. Although technically it is not an income, but we will assume gift as your income also. Because in the name of gift, you are doing lot of cheating and tax evasion. But then government said, if it is a genuine gift, then we will exempt you. So see, there are certain genuine gifts. There are certain genuine gifts which government believes, yes, this is a genuine gift. Then they are exempt. Can you see here? There is one keyword. Okay, chalo. Even if it is not a genuine gift, if it is some other gift, up to 50,000 government is ready to believe it's a gift. But if you say someone gave me a gift of 20 lakhs, who gives you gift? Tell me. Have you got any of your friend who is ready to give you 20 lakhs gift? Okay, I can have a friend who can give me a gift of 20,000 also. Up till 50,000 government is ready to believe also. But for an amount of 25 lakhs, if you say, no, I got gift, unbelievable. That's why it is fully taxable. See, these things which are exempt, these are believable. See, here why fully exempt, because in this full form, if I tell you, you will find even if someone has got 1 crore rupees, it is genuine. I will tell you the full form. That's why here it is fully exempt. But other gifts are not so genuine. But then also what government says, nowadays there are friends also who are so loving. Friends also give gift of 40, 50,000. So up till 50,000 we are ready to believe. But only up to 50,000. Okay. See how that 50,000 measured, I'll tell you. But up till 50,000 government is ready to believe. Actually government doesn't believe this also. But people can argue, you don't know, I have got loving friends, you might not be having good friends. I have got nice friends, they give me gift. So argument will start. That's why government say, okay, not to argue, up till 50,000, we will believe it's a gift. And if it is a genuinely gift, government doesn't want to tax. Technically, gift is not an income also. And government is not greedy to tax gift also. It is just people used to do cheating in the name of gift. Nice incomes also they used to say it is a gift. So to catch the cheating, government had to make the rule, but then government will believe only 50,000 gift. Believable. Then government will also, why 5 crores? My father had so much. After his death, I got 5 crores. So it is believed. Then in I, there are two things, inheritance and will. Will, sometimes a person has died and he has made a will that after my death, 20 lakhs should go to my son, 50 crores should go to my friend. So out of will also, if you have received something, then even if it is in crores, it is believable, because will and inheritance cannot be cheated. Inheritance means it is someone's death. If someone's death is there, it can be proved. And will is also written document. So these are believable gifts. In short, see, in all the points in this keyword of I am Dr. LC, you will find these gifts are genuinely believable. So government will not tax. And if someone says, but sir, even if it is 20 crores, government is not greedy. Government says, let it be 20 crores. Actually, we don't want tax on gift. Because technically gift is not an income. See, these gifts government is taxing. Why? Because there are cheaters who try to claim even an income as a gift. So that's why to slap them, we have started this more than 50,000 tax. But if something is genuine, we don't want to tax it. So I for inheritance and will. M stands for marriage. If on marriage you received gift of 25 lakhs, government is not surprised. Indian marriages, it is possible that on marriage also you get gifts of crores. Sometimes you get in the form of dowry. See, dowry is also kind of a gift only. For example, a person has got married and his father-in-law, mother-in-law, in the form of dowry, they have gone crores of rupees. So that dowry is kind of a gift only. But in Indian custom, it is very common to give on marriages. So if you want to avoid tax, you can always say, this I got on marriage. For example, means you can do planning. For example, I have got income of 5 crores from, it is actually an income. Huh? But I can say I got as a gift on marriage. But that cheating is possible only in the year of marriage. After marriage happens only once in lifetime. See, with the help of marriage you can do cheating. But how many years will? Yes, at least in the year when you got married, every income you say, this was on marriage, this was on marriage, this was on marriage. For example, I get married in this year. So in this year, whatever income I got, I can always lie. What? This also I got on marriage. This also. There were many visitors on my marriage. There were many attendees on my marriage. They give me so much gift. So you can do cheating. But see, can't help. You know, there are many cheating techniques. See, even though the law tries to make the law foolproof, but there are always a loopholes. Loopholes mean there are some leakages where people can find the area of cheating. But this cheating will not work every year. Every year you cannot say, I got married, I got married. How many times you are getting married? A marriage can happen only once. So at least in that year you can say, even if some good income was there, you can say it was a gift on marriage. So this is M for marriage. Then D stands for death contemplation. Death contemplation. Death contemplation means someone is expecting death. He has not died. For example, a person is in hospital. He is counting his last breath. Doctors have given the answer that you are going to die within 2 or 3 days. Or maybe he is on ventilator. Means he is on the last stage. So imagine that person is on his last stage, and at that time he has, he has left all the greed and everything because he knows he is going to die now. So at such time, if he gives gift of 20 lakhs, 50 crores to someone, it is exempt. Because even that gift is believable and it happens in real life. Imagine Mukesh Ambani is such a rich person. Now suddenly if he comes on last stages of his life, he is in hospital, hardly some few days are left. So at that time if he gives a gift of 1 crore, 2 crore someone, It is believable. Because a person who is dying, he has left all the greed. Okay, see, till the time we are alive, we are crazy and money minded. I don't want to give my money to anyone. I don't want to give my money to anyone. But when you are dying, you feel like giving. So such gifts are believable. So this is called death contemplation. Tell me, what is the difference between this I and the D? Inheritance is after death. See, inheritance and will happens when after death. Someone has died and after death you got something. But here, is it after death or before death? Before death, in contemplation of death. In contemplation means in expectation of death. And sometimes your days have come. Because you have got such a big disease like cancer, this, etc., that within some days you are going to die. So this gift is not after death. It is before death in contemplation of death. Contemplating death means expecting death. Okay. Then I for inheritance and will, M for marriage. Wait, I'll show you the full form one by one. I for inheritance as well as will. I have not written will, but will is also there. Then marriage gift. Then death contemplation. Yes, your doubt? Now see, wait. His doubt is what this marriage gift, inheritance which I am talking about, these are what kind of gift? Are they monetary or some property? So see, that point will come later when I come to this part. But since he has raised the doubt, let me clear that whether you get some money as gift or property as gift, the law is same. See, income tax doesn't say that for income you should get some cash only. Income doesn't mean it should be always cash. It can be in kind also. So see, in this whole theory, whether you get gift as money or in the form of some property, the rule is same. Rule is same means if it is from this list, completely exempt. Otherwise, up to 50,000 exempt, above 50,000, CC what I written? Fully means if it is 51, full 51 taxable. Now whether it is cash or it can be gold also. Sometimes you get some gold, means for example I say my friend has given me gold of 70,000. Oh, friend has given gold of 70,000. Forget gold, 70,000. That means it is more than 50,000. It will be taxed. So see, gift can take any form. It can be in the form of money or a property or anything. The rule is same. So if you are thinking on that line, sir is talking about gift, but is it cash or something? It can be anything. It can be cash, bank transfer, property, gold, silver, anything. The rule remains same. Okay. But if it is as per this transaction, then completely exempt. So see, we have reached till I, M, D. Next alphabet is R. R for gift from relatives. If you get gift from relatives, then it is believable. See, if I say someone, my friend gave me 20 lakhs gift, you cannot believe. But if I say my father gave me gift, my brother gave me, my sister, she loves me a lot, then it can be believed or not. So if it is a gift from relative, it is believable. And the gift which government believes, government is exempting it fully. But the question is, what do you mean by relative? Relative means what? Uncle, auntie, cousin, brother, real brother, what? Son, daughter, father-in-law, mother-in-law, chacha, mama. What is relative? So that definition will come after some time. Right now, let me complete this full form first. Then I will explain that who comes under relative. But see, the word relative has to be defined. Because only if someone is my relative, the gift will be genuine exempt. And if gift is from non-relative, then it will come in other gift. Then depending upon 50,000, we will decide the taxability. Okay. So what is relative, I will tell you. Let me complete this first. I am doctor is over. L stands for gift from local authority. What do you mean by local authority? Municipality, municipal authorities. Do you know there are three types of government? Central government, state government, local government. But we don't say local government. We say local authority. That is nothing but municipality, municipal authorities. So that is, in short, local authority means it's a local government. See, government for the whole country is central government. And for Maharashtra state, state government. And for Mumbai city, it is local authority, municipal authority. Okay. Now tell me why a local authority will give gift. See here what I am saying, if someone gets a gift from municipal authority, gets a gift from local authority, it is free from tax. But then doubt will come, sir, we have heard gifts on marriage. We have heard gift from relatives. But gift from local authority, how come it is possible? It is possible, especially when there are some natural calamities. Imagine there was heavy rain. In rainy season, if there is heavy rain and many people's house got destroyed due to heavy rains, if many poor people, their houses, their slum areas, their houses get destroyed, then in such cases, in such case of calamities, municipal authorities give them money. And they give money free of cost. So it is kind of a gift. See, they might not be calling this as gift. They might call it as an compensation. But in the eyes of law, anything you get free, it's a gift. So from municipal authority, gift is possible when, especially when people have suffered. Because see, being municipal authority, they have to take care of the local area. Local authority means what? They are caretaker of the local area. So in the local area, for example in Mumbai, remember once there was heavy flood in Mumbai and many people, houses got destroyed. Okay. So in such cases, municipal authority gave them gift. Okay. So such gifts are exempt because these are genuine. Because the municipal authority, if they have given gift to someone, it is genuinely needed. Otherwise, why will municipality give gift to someone? If they have given gift to someone, that means definitely it might be due to some natural calamity. Some people, some poor people have suffered destruction. For that they have given gift. So it's believable. It's genuine. See, every point you have to convince yourself what? Yes, it is a genuine gift. And only if it is a genuine gift, we are convinced with fully exempt. Okay. See, a student has a doubt that, sir, this municipal authority, the example which you gave, that there are heavy rains, municipal authority gave the money. But sir, that is actually compensation. See, technical word for that is compensation. But here you have to understand anything which you got for free, it's a gift. Actually, law doesn't use the word gift also. Law says anything received without consideration. Anything received without consideration is a gift. Without consideration means you are not given anything. Means you got freely something. So whether it's a compensation or gift, the bottom line is you got it free or not. That's it. So anything for free is a gift. So you also open up your mind. Don't stick to a narrow thinking that gift means it should be occasion types, functions. See, that is a narrow approach. In the eyes of law, gift means anything you got free. It's not necessary it should be at the time of some occasion or function also. Like local authority has not given on some functions or occasion. Rather they have given at the time of some calamities, natural calamity, earthquake, flood. Okay. So this is not an occasion, but see, whether it is an occasion, function or calamity, you are getting some money free. Free money is a gift. And all free monies are treated as per this chart. Okay. So then see next. C stands for gift from a charitable trust. Tell me, if I say I got 50 lakhs from a charitable trust, Is it believable or not? Believable. Because charitable trust, their nature is to do charity only. Charitable trust, they are born for what? To do charity. And charity means they keep giving poor people. For example, if I say I got 5 lakhs to do MBA from a trust. So whether it is for doing MBA, whatever, if a charitable trust has given, it's believable. See, if I say my friend has given 20 lakhs, who has got such friends? Who? What kind of friends are this? It's not believed. But if a trust has given, it is a job of the trust to do charity. So it is believed. And vice versa also. Look, if someone has given to charitable trust, then for trust it becomes gift. But that is also exempt. Because see, being a charitable trust, there are many donations they get. For example, now imagine I am a trust and Mukesh Ambani gave 1 crore. So will you doubt, will you have suspicion? No, this is not. It is believable. Because trusts, they get donations. And for them, donations is like a gift only. Now you say, no sir, this is donation is for free or not. Anything you get for free, it's like a gift. So in short, see, in case of charitable trust, whether trust receives or trust gives, both the transactions are exempt. Only thing is when trust receives, it becomes gift of the trust. And when some normal person gets from trust, it is income of the normal person. But in any case, it is exempt. So best way to remember is gift from or to a charitable trust. Both are exempt. To and fro. To and fro. So next was charitable trust. Now see, last C stands for COVID. COVID. How can you forget COVID, that dangerous disease? So see, on account of COVID, imagine if someone has got COVID and for his treatment, he has got gift. Gift means some sponsorship, some money. That is also exempt. For example, I got COVID and I don't have money for my treatment only. Someone gave me 23 lakhs rupees. My friend only. See, normally if I say my friend gave me, it's not believed. No friend gives so much of gift, okay? Then definitely it is your income, you want to evade tax, okay? But if I say it was COVID, so at the time of COVID, everyone used to help each other. Then on COVID, if you got something free, it is believable. But who should be suffering from COVID, you know? The assessee. Assessee means what, you know? The person whose income you are computing. For example, see, today I took question of Mrs. Khanna. So Mrs. Khanna becomes the assessee. Assessee means the taxpayer. You know, this word I have used for the first time, but in the language of income tax, the word assessee is very common. So whenever I say assessee, means the person whose income I am computing. So tell me, let us take the example of this question only. Either Mrs. Khanna should have got COVID or her family members. Who should be suffering from COVID? Either Mrs. Khanna or her family member. Now family member means what? Spouse. Spouse means the life partner. So for Mrs. Khanna, it can be Mr. Khanna. Spouse, children, parents, spouse, children, dependent parent, dependent brother, dependent sister. If for their treatment, someone has given money for COVID treatment, it is exempt. So tell me, if Mrs. Khanna says, I got 20 lakhs from my friend because some of my friend was suffering from COVID. See, who should suffer from COVID? Either assessee or his family member. Or family member is defined here. So who will come in the family of Mrs. Khanna? Spouse. Spouse means for a Mrs. Khanna, it will be Mr. Khanna. Spouse, children, dependent parents, brother, sister. If these people are suffering from COVID, and if anyone has given 10 lakhs, 20 lakhs, any amount, it will be tax free. Okay. Because see, at the time of COVID, so although it has become an old disease now, but you cannot forget people have literally spent lakhs and lakhs on COVID treatment, on oxygen, this, that, people are literally spent, and many people were not having money to spend. So they got someone to give the money. So that is a free of cost money. But such free of cost gift will be exempt because it is COVID, which is very genuine case. But this point of COVID will not come in exam now because COVID has become now old disease. Still, there are COVID patients coming up. You might have read the newspaper, but not so common. Okay. And even if someone else has got COVID, they can manage with their own money. But today also, if I say, no, I got COVID and I didn't have money for my treatment, my friend gave me, exempt. But who should get COVID? Either myself or my spouse, children, dependent parents, brother, sister means what? Parents, brother, sister should not have their own income. When you call someone is dependent, if they are not earning, right now you are studying, I am talking about you people. You people are studying, you are not earning income, you are dependent on your parents. So tell me, if I get for my treatment, exam. If I get for the treatment of my spouse, exam. Children, exam. And here dependent, independent doesn't matter. Because spouse and children are my core family. Spouse, my wife, my part of life. And my children, they are my core family. Here dependent, independent doesn't matter. But when it comes to my parents, brothers, sister, only if they are dependent on me and someone has given money for their COVID treatment, it will be exempt. That means if my parents, brothers, sister are independent, having their own income, and if for their treatment someone has given the money, it will be taxable. No, parents means not the in-laws. See, for me, parents means not my in-laws. My parents means what? My father and mother, not my in-laws. In-laws we call, respect them as father, mother, but then after all, they are not my father, mother, they are my in-laws. Okay. So here, when I say parents, it's not father-in-law or mother-in-law. It's my mother and father who gave me birth. Okay. So tell me, it should be whose treatment? Repeat. Either assess his own treatment. See, assessing means you understand, na? Say for example, if you are calculating my income, so Shirish Vyas will become the assessee. And in this question, we are calculating income of Mrs. Khanna. So Mrs. Khanna is the assessee. And similarly, look, here Mr. Saxena. So he is the assessee. Assessee means the person whose income we are being computing, who is being assessed. Okay. So it should be whose treatment? Assessee's treatment, spouse, children. And in spouse and children doesn't matter dependent, independent. But parents, brothers, sisters should be dependent. And if you get the money for the treatment, it is exempt. But you should get the money for these people's treatment only. If you get for someone else's treatment, then it will be taxable. But see, there are 2 points in COVID. COVID treatment, COVID death. See, in COVID times, you might have noticed some people get help in treatment. Some people get help in death. See, help in treatment. Why do you need help in treatment? Because treatment cost requires lot of expense in hospital. But why someone gets money on death? Sympathetic grounds. For example, I was an employee. I was working in some company, and suddenly due to COVID, death occurred. So my boss will feel sympathy for my family. So my family member will get some money. So that is also exempt. But if death happens on COVID, exempt only up to 10 lakhs. Because law thinks practically, if someone has died, there is no scope of saving now. The one who has died has died. It is just sympathy is left. So that's why only up to 10 lakhs. But if it is treatment, then there is no limit of 10 lakhs. Because treatment means there is a scope. A person can get alive. So even if you get a gift of crores, it is exempt. Expenditure doesn't go in crores. I'm just saying for the sake of example that if someone's treatment is going on, then there is no limit of 10 lakhs. You heard 10 lakhs I said right now. 10 lakhs limit is there when if death occurred in COVID. So for example, here Khanna, Mrs. Khanna died. Mrs. Khanna died and her family member received up to 10 lakhs exempt. See, if it is COVID death, the amount received should be up to 10 lakhs. And no one gives about 10 lakhs firstly. But law says up to 10 lakhs if someone is getting, it will be exempt. But that is if it is death. But if it is treatment, any amount, no limit. See, I have written here, look, read. COVID treatment, see, treatment can be of self also and family also. But death that assessee himself has died, then who will get the money? Family. See, here assessee is alive, so it can be assessee's treatment or family's treatment. But here I have not written self-wife. Why? Because assessee had died. See, whose death has taken place? Assessee's death. So in my that question, it was Mrs. Khanna. Mrs. Khanna died in COVID. And then on her death, family is getting. And family means who should get? Spouse, children, dependent, parents, brother, sister. Family has got its definition over here. See, I have written here. What is this? Spouse, children, dependent, parents, brothers and sister. Okay. So see, in C, there were two COVID points. COVID treatment, COVID death. COVID treatment, COVID death. COVID treatment, no limit. COVID death, there is a limit up to 10 lakhs. And in COVID treatment, it is a treatment, means no one has died. So it can be my treatment also, family's treatment also, anyone. But in COVID death, I have died. So who receives the money? Family member. But if they receive up to 10 lakhs, it will be exempt. But I have got a gut feeling this point will not come in question of today's time. Because now COVID, we have just gone away from that. Okay. But still in the law, which law I am teaching you? Income Tax Act. It is still written in the law. But in the question, this point has got less likeliness. Okay. So what is the full form of I am Dr. LC? Repeat. Inheritance or will? Please by heart. Huh? Inheritance or will. M for marriage. D for death contemplation. R for relatives. L local authority. Gift from local authority. Not necessarily it can be a compensation, but anything free from local authority. Then first C was charitable trust. Whether from charitable trust you receive or a charitable trust received from someone. To and from both. Then last C was COVID treatment, COVID death. COVID treatment, no limit. See, you should think logically. If there is treatment going on, there is a scope of revival. A person can survive. So, government also feels, give him money, crores, 10 crores, we will exempt. So, COVID treatment, no limit. But COVID death, up to 10 lakhs, if the family member gets, it will be exempt. Okay. See, these gifts are treated as fully genuine, that's why fully exempt. Wait, dear, what was R? Relatives. Now, relatives means what? See. There is a tree over here. Can you see one tree? Yes. This is a family tree. Anyone who is sitting in this tree is your relative. And if you get gift from these people, take it. Take it, it will be tax free. So, relative means what? Now, can you guess the full form what I have written? See, now imagine this is me. Individual means a person. Look at me. Imagine I am here. This is Shirish Vyas. Now tell me, who will be my relative? My spouse. Spouse means a life partner, means my wife. Then brothers of my spouse, sisters of my spouse, my brothers, my sisters. Okay. And along with their spouses, along with their life partners. Plus, who else? My father, mother, with their brothers and sister, along with the life partners. So tell me, if I talk from my father's point of view, this is brother of my father, which we'll call it as uncle, but in Hindi we call chacha. And chacha's life partner will become chachi. So chachi is also here. Okay. But in English, whether it is chacha or mama, everyone is uncle. Okay. But if you notice, paternal and maternal, both the uncles are. Paternal means from father's side. Maternal means from your mother's side. And see, I put father and mother in the box. So whether it is brothers and sister of father or mother, they are my relatives. And not just alone brother, sister with their spouse. See, in this tree, no one is sitting alone. Everyone is sitting with their life partner. So for example, if you see my brother, see, this is me. So this is my brother. So my brother is not alone. He is there with his life partner. And this is my sister. She is not alone. She is there with her life partner. And this is my life partner. And who is this? Brother of my spouse. And that brother, which we call it as brother-in-law, in Hindi we call ye mera sala hai. So this is my sali. Sali means brother-in-law's wife. Okay. And this is sister-in-law. And sister-in-law along with their spouse. Okay. Then, who is this? Father and mother of my spouse. But if you think from my point of view, they are my father-in-law, mother-in-law. In Hindi we say saas sasur. Saas and sasur. Or we can say father-in-law, mother-in-law. But did you notice? My father-in-law, mother-in-law are without brothers and sister. Means they have brother, sister. But in the definition relative, they are not counted. Because, they become far now. See, this is my personal father, mother. My personal father, mother will be with brothers and sister both. But these are my personal father, mother or in-laws. So that itself is sufficient. I don't want their brothers and sister. They become a relative of far, far nature. In fact, they are not relative in the eyes of law. See, this definition is important because only if you get gift from these people, you can say it's a gift from relative. It is exempt. And you should feel happy that relatives definition is broad. There are many people covered here. And law says, you claim gift from any of these people, we are ready to exempt. Because see, this family bond is so natural. There is a love and affection. See, although these are not my personal father, mother, but there is some love with my father-in-law also. So if my father-in-law gives me a gift, it sounds natural. So see, these brother sister, they are not my personal brother sister. They are brother sister or spouse. But then in Indian family, we develop so close bond that love and affection comes. So the gift sounds natural. Okay. But up till now, my brother-in-law has never given me the gift. But he has given me gift of small amount. Up to small amount to it is always exempt. But if he gives me gift of some big amount, 1 crore, still it will be exempt. Okay. So I keep telling him, give me gift. It is tax free for me. Tell me now what is left in the drawing. LA means lineal ascendant. See, how do I spell it? Lineal ascendant. See, lineal means in my line. Ascendant means above me. Ascend means to go upward, upward, upward. So tell me, who is above me? My father, mother. And above my father, mother, my grandfather, grandmother. Above them, great grandfather, grandmother, great grandmother. and above them, they are all called lineal ascendant. Lineal, why do you say lineal means you have to see your line. For example, here we are solving question of Mrs. Khanna. So in Mrs. Khanna's line, if you go, so who will come in her line? Mrs. Khanna's father, mother, and their father, mother, and their father, mother, and their father, mother. That whole line. But whose line? Khanna's line. So see, here it is. This is in my line, ascendant. And in my wife's line also, ascendant. They are my relatives. So tell me, what about my wife's grandfather, grandmother? They are here. See, my wife is sitting here in the tree. Can you see? And this is grandfather of my wife. They are also my relative. And not just grandfather, even grandmother. And not just grandfather, grandmother, great grandfather, grandmother also. See, when I say ascendant means in the line, whoever comes above. So can you guess what should be this? Lineal descendant. See, descend means to go down. And lineal means in your line. But tell me, down who is below me? My children. In my family line, who is below me? My children. And children of my children. And children of my children of my children and so on. See, law doesn't say only your son and daughter. Why? If my son and daughter are also there, their son and daughter also, and their son and son, daughter, son and son, daughter also, everyone is my relative if they are alive in this life. For example, in my case, I just have son and daughter, but later I might have grandson, granddaughter, great grandson, great granddaughter. They are all my relative. Now, can you tell me why this is a common line? Obviously, this will be a common line. Children will come. Where did children come from? It is due to me and my wife. It is a common line. But the line above is common or different? So that's why, see, I have drawn thoughtfully. It is not a random drawing. See, when it was going upward, my line is different because my mummy, papa, they are different. And her mummy, papa, they are different. Okay. But children, will I say my and her? It is our. Our means it is a common line. See, best is if you remember with this drawing, it will become very simple. See, if you see in the law, they have given this in very horrible manner. This same thing is given in the Income Tax Act in statement form. Imagine if this comes in a sentence form, it becomes so horrible. But that whole sentence form paragraph, I have converted into a drawing. And with this drawing, it becomes very simple to remember. Actually, you should once practice to draw. Means you should do like this. This is me, okay? And then you should write, this is my spouse, my life partner. And then, actually it's like this. Me, my life partner. My brother, sister, her brother, sister. My father, mother, with brother, sister. Her father, mother, alone father, mother. Then my lineal ascendant, her lineal ascendant, our lineal descendant. Feel the action. How did I do? Repeat. Me, my wife, okay, or spouse, okay. Wife doesn't suit. If it is a male, then wife. If it is a female, then husband, okay. So in my case, it is me, my wife, my brother, sister, her brother, sister, my father, mother, with brother, sister, her father, mother, without brother, sister, my LA, her LA, our LD. LD means lineal descendant. And everyone is with spouse. Okay. You can see this in red. I have written spouse, 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 spouse. Even if it is my children, they are along with their life partner. Okay. Now what to do with this? If you get gift from these people, it is a gift from relative. And it will be fully exempt. Okay. Now see here. After this, tell me, other than I am Dr. LC, what is the treatment of other gifts? See, other gifts government actually doesn't believe. But then if government directly taxes it, people will feel bad. For example, person can argue, you might not be having good friends, but I have good friends, they give me gift. So government says, okay, all friendly gifts are also treated as genuine, but only up to 50,000. But if it goes beyond 50, even if it is 51,000, fully taxable. Okay. Okay, now see here. Still the theory is not over. You think that the theory is over, look here. Now see this other things where we follow the rule of 50,000, this will go more in detail now. Not so much, but this will go more in detail. Then only you can say theory of gift is over. Means gift theory is still going on, okay? So I will continue with this part now. Look. See this same drawing I have drawn it again. You want to see it is same or not? Check, 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 check. Employer, customer, other. I am Dr. LC, okay? Check this. Same thing I have drawn here. Employer, customer, others. This is I am Dr. LC. In C there are two C's. One is belonging to charitable trust, other is related to COVID. Okay. And then others. You know, this I have reduced in size because this I have taught now. Now I want to elaborate other gifts. Now see, other gifts can take three forms. Sometimes you get gift in the form of money. Sometimes you get gift in the form of movable property. Movable means a property which can move. Gold, silver, shares, something which can move. And sometimes you get gift in the form of immovable property like house, a land, something which is not movable. Now see, depending upon what you have got, the rule will differ little bit. See, broadly the rule is up to 50,000 exempt, above 50,000 fully taxable. That remains the same. But still there is a doubt coming in your mind, why this three classification? I'll tell you, look. Firstly, this money gift is simple. For money gift, what is the rule? If I get gift in money and if it is up to 50,000 and see this 50,000 per day, per month or per annum, per year, throughout the year, even if 10 people have given me the gift, I have to aggregate all. Total how much I got during the year. If it is up to 50,000 exempt. So tell me, if I got gift of 5,000 rupees from 20 people, everyone gave me 5,000. 5,000, 5,000, 5,000, 5,000, 5,000. How many people gave me? 20 people. Let it be 20. Let 1,000 people give. The person who got is the same person. So you have to aggregate all the amounts. So tell me if 5,000 rupees is given by 20 people. So per person 5,000. So into 20, 1 lakh. So in all I got 1 lakh taxable. See, it is not per person. It is from all person taken together how much you got. See, otherwise it would have been like this. I would have said, I got gift of 40,000 from Mr. X, a different friend. Then 40,000 from another gift, a different friend. 40,000 from another gift from different friend. See, in a businessman, you got different customer. Every customer actually is selling the goods and making income. But you will say, no, they are giving me gift. So for me, students are my customers. So if a student has given me CA inter fees of 60,000, I will say he gave me gift of 60, he gave me his gift of 60. Let's assume fees is 40,000. Every fees of 40,000, 40,000, 40,000, I will say all are gift. So it is not per person, it is from all people taken together how much you got. Okay. So if in the question they say gift from Mr. Sarita, Mr. Sunita, Mr. Resh, Miss Sarita, Miss Sunita, Miss Reshma, Mrs. Iyer, and all. And the total of that if comes to 50,000 of the whole year, then exempt. If it is above 50,000, even if it is just 1 rupee above, taxable. In such case, what you should do, if someone is giving you a gift of 51,000, you say, I respect your gift, but give me only 50. Take your 1,000 back. Because instead of 50, if he is giving you 51, it will become fully taxable. And many times the tax is 30%. Till now, I have not explained you the percentage of tax. But just for example, if you take 30% tax, imagine if someone gives you 51,000 gift. So 30% of that will go in tax only. So it's better you request him, please don't give me gift of 51,000. Give me 50, give me 49,000. But don't give me above 50. Yes, if he is ready to give you 50 lakhs, then it's a different thing. Then we can pay the tax. Okay. So, what is this? Aggregate. Aggregate means what? You have to total of all the people giving you gift together for the whole year. For the whole year from all the people taken together. Up to 50,000 exempt, above that it will be taxable. Okay, now in movable property, it is the same, but you have to add the fair market value. What is FMV? Fair market value. For example, he gave me a gold, she gave me gold, he gave me gold, she gave me gold. Many people are giving me gold. So I will add all the golds combined. But what I will add? Market value. For example, he gave me gold of 5 grams. So I will have to find out the market value of 5 grams gold. She gave me gold of 2 grams. So I will find the market value of that. This way I have to add up all the market value, and if the total is up to 50,000, exempt. Above 50,000, taxable. Fully taxable. It is just, if it is money, you have to simply add the money. But if it is a movable property, we have to add the market value of that item. Now whether it is gold or silver, anything. Okay. But see, in movable property, look, sometimes you purchase gold at a low price. Even that is counted as gift. Relax. What did I say? Sometimes you purchase some gold, silver, etc. anything at a lower price. That also becomes a gift. See, I'll tell you how. Imagine I purchased a gold of 40,000. Means its market value is 40,000. But I had to pay only 5,000. For a gold having value of 40,000, if I have to pay only 5,000, so what is the difference? 35,000 becomes a gift from me because it came free of cost. See, for 40,000 I should pay a cost of 40. But if I pay 5,000 for an item having value of 40, so 5,000 I paid. But the difference of 35,000 is also a gift for me. Even government considers this as a gift. Actually, it's a transaction of purchase of gold. I will say I have purchased a gold. It was not a gift. But you purchased a gold of 40,000. But how much you paid? Only 5. So for a gold of 40,000, ideally you should be paying 40. But you paid only 5,000. So we will treat the difference as your gift. So what is the difference? Oh, 35,000 is less than 50. Then it's okay. But tell me now, it is like this. I had purchased a gold of 1 lakh. For that I paid only 10,000. So what is the benefit which I am getting? See, you have to calculate the benefit amount. So for a gold of 1 lakh, see, gold is just an example. Huh? Don't buy hard gold. It can be any movable property just for the sake of example. So tell me, if a gold of 1 lakh market value, I am paying only 10,000. So what benefit I got? 90,000, which is exceeding 50,000 taxable. See, if something is free, the whole value becomes taxable. If something is not free, you have paid some price, difference becomes taxable. So there are two possibilities, either no price or low price. Did you hear what did I say? Either no price or low price. No price means someone gave me the gold, wow. No price, total free. Then the full market value. But sometimes it is not no price, it is low price. Means you paid, then you have to see the difference. See, this is what you will find here. Look here. Read. See, what is this? No price. I have zoomed to make you see low price. Okay, so tell me, if it is for no price, then the full market value will be seen. Tell me why I have to write aggregate FMV? Because there might be 10 people. One has given me gold, one has given me silver, one has given me diamond, other has given me shares. Aggregate. See, don't forget in this whole topic, when we are measuring that 50,000, is it 50,000 from one person or all people combined? All people combined in the whole year. See, it might happen that in Jan month I got some gift, then August, then September. You have to add the total of the whole year from all the people combined. That is why I am mentioning the word aggregate. So, aggregate fair market value, if it is up to 50,000, then exempt. And if it is above 50,000, then taxable. Tell me here what I have written. Aggregate of difference. Tell me in this example, what did I say? I got 1 lakh gold, market value 1 lakh, but I have paid only 10,000. So how did you get 90,000? 1 lakh minus 10. So 1 lakh is FMV, 10,000 is actual price. That is what I written. See, I hope you understand how did this formula come. FMV is that 1 lakh in my example, and actual price is 10,000 which I paid, and obviously difference is my gift. If someone says no, full 1 lakh is your gift, why 1 lakh? For 1 lakh I have paid at least 10,000, so remove 10. So difference is treated as my benefit, and only on difference I have to pay the tax. But here also why I written aggregate? All people together. For example, he gave me gold of 10,000 for 3,000. Gold of 10,000 gave me for 3,000. So difference is 7. But then she also gave me gold of 20,000 for a price of 4,000. 20 and 16. So this way there are so many people. I have to add all. But in every transaction I will add the difference. But see, in aggregation, all the free gifts are to be kept separate. And low price items you have to keep separate. Means what? I repeat, while aggregating, all no price items you have to keep different. And low price item you have to keep different. Okay, so if you understood answer, tell me a thing. He gave me gold of 45,000 completely free. Completely free, okay? 45, remember they are 40 completely free. She gave me gold of 70,000 at 5,000. Sorry, not 5,000, say 30,000. 70,000 gold I paid 30. So this is a transaction of low price, and the previous transaction was for no price. Will you combine or keep separate? Separate. And if you see separately, so in my first transaction he gave me gold completely free 45. So it is less than 50 exempt. And her transaction should be kept separate because it is no price or low price. That's what I meant to say. And some other person gave me money. That also you keep different. See, aggregation of money, aggregation of no price movable property, and aggregation of low price movable should be kept separate. So answer, 3 people gave me money, 3 people gave me gold free of cost, 3 people gave me gold at a lower price. So will I add all? No. So what to do? 3 people who gave me money combined, and 3 people who gave me free gold combined, and 3 people who gave me gold for a lower price combined. That 3 combination will become. And if all combinations are coming below 50 exempt. So in short, never aggregate this with this. In the question, this transaction should be kept different, and this transaction should be kept different, and money gift should also be kept different. That you can write. See, money gift, how to find out? They will write money or cash or check, money and or GPay. If someone gives me gift through GPay, it's money only. All that is money. And if it is movable property, they will write gold, silver, shares, etc., etc. And if it is no price, they will say free of cost. If it is low price, it is at a lower price. They will say he purchased a gold of 1 lakh for rupees 10,000. Then it is a transaction of low price. Okay. Then last thing remaining, immovable property. Okay. Now see, in immovable property also you will find no price, low price. Give me example of both. You imagine the example. If you are not saying, at least you think. See, no price means totally free. Means I got one house free. Means some of my friend gave me, you want this bungalow? Take it. It's yours. We don't have such friend, but just for example. And why I have to take example of friend only? Because see, if it is relative and all, it will come in I am Dr. LC. See, these other gifts are all weird gifts. These are not marriage, relatives. All the genuine gifts are kept aside in I am Dr. LC. Okay. So imagine my friend gave me a bungalow free of cost. So I have to see if it is above 50,000, it will be above 50,000. So it will be taxable. But if I get a bungalow whose value is 5 crores and if I get at a lower price, then it becomes a low price transaction. So see, here also there is no price and low price. But here we don't do aggregation. Here you have to see per property. For example, he gave me a bungalow having a value of 50,000 only. She also gave me a bungalow having a value of 50,000 only. So if you combine, it will become 1 lakh, but you cannot combine here. It is per property. And immovable property are so costly items that individual property only it will become above 50,000. See, my example also sounded so funny. I said, he gave me a bungalow of 50,000. Bungalow for 50,000. But just for example, then she also gave me a bungalow of 50,000. So will you aggregate? No. In immovable property, law doesn't ask you to aggregate. You have to keep it per property. So per property it is 50, 50, both are exempt. So if it is a movable property, you have to aggregate. Because see, movable property like gold and silver can come for 2,000 also. Silver coin, you don't buy on Diwali, etc. Silver coin can come for 2,000 also. So they are not that valuable things. So you have to aggregate all movable items. But if it is immovable property means what? It is house, bungalow, land. So they individually are so valuable that we will see per property. There you don't have to do aggregation. So if a question comes very funny that I got a gift of land of 40,000 only from one person, then another person gave me one more land of 40,000. So will you combine? No. Both 40 you will keep separate and both are 40 means below 50 exempt. But practically it is not possible a land having a value of only 40,000. Okay. They always go in crores. Okay. But the point is, look what I written here. See. Read what I written here. What is SDV I will explain. But per property you have to see. Per property. Okay. Now see, SDV means stamp, duty, value, which is nothing but the market value only. But whenever it is immovable property, we call market value as stamp duty value. Stamp duty value. Why? Because whenever there are immovable property, there is some stamp duty levied on that. For example, today if I purchase flat or sell flat, so state government, not central, state government levies stamp duty and they levy stamp duty on the prevailing market value. So since stamp duty is levied on a market value, so such market value is called stamp duty value. So see, you don't think stamp duty value is a new concept. It is as good as fair market value. But whenever we talk about houses, land, we don't say market value. Instead, we use stamp duty value. It is just a difference in the spelling. Feeling wise, meaning wise, it is market value only. Please don't think it's something different out of the different world only. So this is as good as market value. So in the question they will say stamp duty value was 40,000, 30,000 means up to 50 then exempt. And if it is above 50 fully taxable. But you will see per property. See I have highlighted here per property you have to see per property. Okay. Now see here. What is remaining last year? Last thing is remaining. Low price. Now, can you give me an example for low price? First, you create an example. See, low price means you are not getting totally free. You are paying some price but less price. See, if you pay full price, then it is not a gift. If an item having value of 1 lakh, you pay full 1 lakh, then there can be no element of gift. Element of gift comes when you paid lesser price, the difference becomes your benefit. So in Hindi we say difference is your maza, and on maza there is saza. Maza means benefit, saza means tax. But when do you get that maza benefit? When you pay low price. So can you create an example of low price over here? No, this is immovable property you're getting. See, if you get totally free some house, then it is no price. Low price means I am buying a flat, but the flat has a market value of 20 lakhs, but I had to pay only 2 lakhs. So what is the difference? The flat had a value of 20 lakhs. I paid only 2 lakhs. So difference of 18 lakhs is my benefit. So that difference you have to check, it is above 50,000. So it will be taxable. But now comes the climax. In immovable property, you have to check two criteria. 50,000 also and 10%. See, sometimes even if the difference is more than 50,000, still it is not taxed. Like for example, look here. I am buying a land. Listen to the example carefully. I am buying a land which is having a value of 50 crores. So tell me, if I buy a land of 50 crores, don't you think I will do bargaining? Or you are so rich that, 50 crores, take it. Even a rich person does bargaining. Here I am talking about a purchase of land. So imagine I am buying a land of 50 crores. So by little bit of bargaining negotiation, if I make it a deal of 50 crores as say for example 49 crores. So what is the difference? If you see difference of 1 crore, the difference seems to be more than 50,000. But this is normal bargaining. If I am buying an item of 50 crores, little bit of negotiation, if I make it 49, so that difference is not, it should not come in the eyes of government. This is a normal bargaining. But if you stick to 50,000, you will feel, difference of 1 crore. It is above 50,000. So government will tax. But don't you think it will be unfair? Yes. Because this is normal bargaining. If you are buying a land of 50 crores, little bit negotiation you will do. And if that 50 crores ka deal, you make it at 49 crores, it is very natural. In such case, what you should see? If the difference is not more than 10%, it is a natural bargaining. Then government will not tax you. What did I say? If the difference is not more than 10%. 10% of what? Actual price which you are paying. So tell me, no. I am buying a land of 50 crores, that is the market value. And bargaining, I paid only 49 crores. So you have to find 10% of 49 crores. So 49 crores, 10% how much? 4.9. So up till 4.9 crores difference is also normal. Means it will not be taxed. Because see, immovable property means the prices are in crores. And when the property is pricing in crores, little bit bargaining will automatically create some difference. And that difference will always be above 50,000. So tell me, if I am going for a purchase of 50 crores property, that seller will also have some shame to bargain. Will he say, oh, I'll reduce 2,000 rupees for you. Transaction of 50 crores, there if I request do something less, will he do less of only 2,000? At least you have to respect the value of the transaction. So he will give some discount. And see, normally any person who expects some discount, we have the tendency of giving 10% discount. So up till 10% difference. See, you are not gone to somewhere and requested for discount, give some discount, give some discount. So 10% discount sounds very normal. So the transaction is of 50 crores, but 10% don't calculate of 50 crores. Huh? In the law, they have written 10% of your actual price. 50 crores in my example is stamp duty value, which is as good as market value. In short, here 50,000 is not important. 10% is important. In fact, both are important. See, for the timing, you will have to keep some patience. See, first I will see the difference between SDV and actual price. First, you have to see how much benefit you are getting. So, in my example, 50 crores was the stamp duty value, and I did bargaining, and I had a deal of 49. So, 49 crores is actual price. So, difference is 1 crore. Now, this 1 crore you have to compare with 50,000 also and 10%. And then you have to see whichever is higher. Calculate and tell me. What comes to 10%? 4.9 crore. Now 4.9 and 50, in that too what is higher? 4.9. And now see, is our difference up to 4.9? Yes. Our difference was just 1 crore. So it's below 4.9, exempt. See, I know this will not go easily. I will have to give 2-3 examples. I have kept ready for you, don't worry. See, try this. I will give you one technique to solve. It will become very simple procedural. See, I will give you two examples here, and then I will make one format only for you. I have kept everything ready. I know it is not that easy that you can rush and move ahead. Try this. First, what do you mean by this example? Example 1, what do you mean by this? What is 76 lakhs? What is the full form HTV? Stamp duty value. What is the meaning of that? Market value. So imagine I am purchasing a land. Okay, the land's market value is 76 lakhs. And obviously such a costly property I am buying. First thing practically, will I bargain or not? Yes. So I requested, please do something less, please do something less. So he did less and the final deal was at 7 lakhs. 70 lakhs. So what is the difference? This in Hindi we got maza. Maza means benefit. Maza is a Hindi word. In English we can say this is the benefit we got. Now you have to compare, is this maza small or big? If it is big, taxable. If it is small, exempt. How to decide this is small benefit or big benefit? Now you have to put one formula here. Either 50,000, see that 50,000 is perpetual in this gift theory, and 10% of actual price. What is 10% actual price? This is the actual price. 10% comes to how much? 7 lakhs. Now, between these two figures, you have to take whichever is higher. Between what? 50,000 and 10% amount, whichever is high. So, what comes to high? This one. Now, compare with this. Is our benefit small or big? Small. 6 lakhs is smaller than 7. Exempt. Means make one technique. See, if you directly try to do it with your mind, it will become tough. Best strategy is first see See, government is targeting on what the difference. So first find out the difference. Okay, difference means which you can call it as benefit. Tell me why I'm calling this a benefit. Obviously, if a property has a value of 76 lakhs, I had to pay only 70. Yes, feel. For a property of 76, I had to pay 70 only. So how much I saved? So it's a benefit. But if this benefit is small, government will think, okay, this is a natural bargaining. Little bit bargaining will create a difference. And every time there is a difference, we should not tax. It would be not fair. So this is little bit or big. For that you have to see the formula. And see, I have shown the formula here. Look. 10% of actual comes to 7 lakhs. And this you have to always compare with 50,000. And then within this two, you have to select which one? The one which is higher. Okay. So one which is higher is 7 lakhs. So now see, once you choose 7 lakhs, this 50,000 all is scrapped. Now you have got 7 lakhs on one hand and the difference of 6 lakhs. So our maza is small or big? It is small because 6 lakhs is small. So since the benefit is small, it will be exempt. So look conclusion. Look at the conclusion. Exempt. Okay. Now try other one. How to do? First, what do you mean by this example? 4,80,000 is what? Stamp duty value means what? It is the market value. Means the fair market price is 4,80,000. But when I purchased the property, I negotiated, I did bargaining. Everyone does bargaining, you know. Okay. So after doing bargaining, you settle the deal at 4,40,000. Actually, the transaction you are understanding is what? It's purchase of immovable property. Don't forget what we are studying. And why I'm saying purchase? Because see, if it is no price, then it is free. But if it is low price, means you are paying some price. And the property is coming, you are paying price, it's a purchase transaction. See, in the question they will write purchase. See this thing, how in the question they will write? Purchase of a property for 4,40,000, which had a stamp duty value of 4,80,000. The question will be framed in the form of purchase. So tell me, what is the maza you got? Maza means I hope you are, maza means the benefit, 40,000. Now you have to compare if it is a small maza, small benefit, then exempt. If it is big, then taxable. But how to decide small and big? Compare this with our formula. Okay. And if this amount is smaller, then exempt. Bigger than taxable. Now tell me what is our formula. I had the formula. 10% of actual price or 50,000, whichever is higher. See, after some time, what mess you will do? You will do whichever is lower. It is whichever is higher. Okay. Because in immovable property transaction, difference can be more than 50 also. Higher. Okay. Because the transaction itself is in crores. So little big bargaining can also create a difference in crores. Okay. So tell me what is the amount? 10% comes to how much? See, again a blunder which people do is 10% on what? Actual. These students forget. So here 10% of 4,40,000 is how much? 44,000. Compare this with 50,000 and select whichever is higher. So 44 and 50, what is higher? Compare our maza. So the benefit which you are getting is less than 50,000 or more? Less. Then it is small benefit exempt. Okay, tell me, what if I change the figure? What if I am making one change? What if this was 4,95,000? So HDB 4,95,000, actual price I am keeping same, 44,000. So now what is the difference? So now I am getting a benefit of Now find out. 10% comes to how much? Still it is 44,000 because 10% we are taking on actual. And I didn't change the actual price. Did you notice? In my new example, I changed the stamp duty value. So 44 and 50,000, compare with that. What is higher? Now compared to 50,000, our 55,000 is greater. Now this is a small benefit or big benefit? Fully taxable. Entire 55,000 will be taxable. Means in our statement of income from other source in the outer column, 55,000 will go in the outer column. Okay. See, now if I make any changes, once you know the method, let me change any figure. See, best I have made a formula only for this. Mean this is the best to explain the students. See, I tell my students this. Students, first write the stamp duty value. Then see the actual price. Then find out the difference. Difference in Hindi we call it as maza. In English if you want you can call it as benefit. And then compare this with the formula of 10% of actual price or 50,000 whichever is higher. See this arrow means. And then if this difference is less than or equal to also, then exempt. Can you see less than equal to I have written here? And if this figure is greater than our formula figure, then it will be taxable. Best is to remember this thing. But you know, this headache is in case of immovable property only. And that too if it is a low price. See here. See, everything is smooth if it was still here only. This is little complicated. Complicated in the sense you have to be little careful, and once you go as per this trick, as per this technique, definitely your answer will come. Okay. Okay, try this example just for my satisfaction. In the question they are given like this. He purchased a land at rupees 80 lakhs. At rupees 80 lakhs, stamp duty value was 93 lakhs. 93 lakhs. Let me do together. Help me here also. What did I say? Purchase a land at 80 lakhs. Stamp duty value was 93 lakhs. Do you agree this will be given in the question? This has to be given. Now what do you do? Find out the difference. Difference is 13 lakhs. This you can do. Then on right hand side, apply our formula. 10% comes to how much? 10% actual, that comes to 8 lakhs. Compare with 50,000, what is high? 8 lakhs. Now see, we got benefit of 13 lakhs. Is it a small benefit which government will say exempt? No, 13 lakhs is a big amount. You have to compare with 8 lakhs. See, this is a greater than sign, you understand or not? This is greater than. So because the benefit is greater than, see, it will be taxable. That full 13 lakhs will become taxable. See, this is a foolproof formula. Anything comes in the question, this will always give you right answer. Okay. See, now complete chart is done. Everything is completely done. Read from the top. Just recap fast. Gift. Can you see this thing? If you get gift from employer, then it is not recorded in income from other sources. It is recorded in income from salary statement. Then if you get gift from customer, it is not recorded in income from other source. It is recorded in income from business. Okay. But if it is some other gift, then welcome to Ifos. But how to welcome depends upon, if it is I am Dr. LC, just write in the statement, put a dash. Let it be 2 crores, 10 crores, any amount. Put a dash. If it is I am Dr. LC, inheritance of will, marriage, death contemplation, relative, local authority, charitable trust, to and from both, COVID treatment, COVID death, COVID treatment, any amount, COVID death up to 10 lakhs, COVID treatment for myself, family both, COVID death for family. So myself died, so family only, okay, but up to 10 lakhs. So if I am Dr. LC, completely exempt. Except in that COVID death, it is up to 10 lakhs only, okay. And other gifts, other means what? Other than I am Dr. LC, okay. So here actually you can make 5 categories. How you know? 1, 2, 3, 4, 5. Means there are 5 things. How? Gift of money, one thing. Then gift of movable property for no price, completely free. That is second. See why I am keeping separate? Because aggregation is to be done separately. Then third is gift of movable property at a lower price. Means you are buying something but you paid less price or difference. Okay. Then gift of immovable property for no price. And then gift of immovable property at a lower price. Tell me where to do the aggregation? Here it is per property. Here everywhere it is per property. Here we don't do aggregation. Every person give from this person, keep it different. Give from this person, keep it different. It's per property, per transaction. But here it is per or combined. Combined. But all free of cost properties are to be combined separate. And all low price properties are to be combined separate. And money is again to be combined separate. And everywhere the rule is 50,000 exempt. Above 50,000 fully taxable. Except here. Here we have to compare 50,000 and 10% both. Whichever is higher. And then we see if the difference is less than exempt, less than or equal to, greater than taxable. See, although our time is up, but please bear with me. This theory is such that immediately if a question is solved, you feel confident. I could have left the lecture also, but then this theory is so sensitive, especially this part at the end and the one which was saying, look, aggregation. So if it is practically solved once, you will feel confident. Otherwise, whatever I taught will go waste. Okay. So please bear with me, just one sum and then I will leave the lecture. Okay. And see, it's CA level, you have to increase your capacities. And capacity is all a state of mind. See, if your state of mind is so negative, I cannot sit for more than 1 hour, I need some break. Then your life will be like that only. But if your mental state is like this, I can sit for 24 hours. I know no superhuman can do that. But your mentality should be like that. A robot can do. But human being cannot sit non-stop for 24 hours. But your mentality should be, I can sit for 24 hours. That should be your mentality. Even I get tired non-stop speaking. You know that tea person, the tea vendor came, he also felt pity. Let me give some tea to sir. Because I am speaking since long time. But I will not have. Breakless, breathless, non-stop, stamina, capacity, increase, limitless. That should be your mentality. Okay, so we'll do one good question right now, which will cover all these points, okay? Question number 11. Won't take much time, okay. Do one thing, keep the statement ready, because see, our style is what? We will go in the order of the sum. One by one we will give the effect of all items, okay? So keep this statement ready. See, my statement is already ready. Prepare two amount columns, inner column and outer column. Actually, see, I have written the short form, but it's better you write the full form. Huh? Income from other sources. Although this short form is very popular, by chance in the exam also if you write, they won't deduct the marks. But in exam you can follow shortcut because you have got crisis to complete the paper on time. But right now at least you write neatly. Statement of income from other sources. Ready with the statement? Okay, now. First I'll do one thing. Just have a glance over the question. All the points are gift only. We are not reading in detail. Just see orally. See. First point, can you see cash gift? Don't go in detail. Gift. I'm just verifying all the points on gift. So that mentally you can think in lines of gift. Okay. Second points, two plot of land gifted. Okay, gift. Then he purchased a house. See, purchase transaction also becomes gift. If you purchase at low price. See, here also it is like this only. Stamp duty value 750, but you are purchasing at 6 lakhs. So you are purchasing at low price. Then just read broadly. We'll discuss in detail. Then he purchased land from Mrs. Iyer. See, purchase transaction can also become gift. It is at low price. So see, is it low price or not? Stamp duty value is this much, but you have paid only 9 lakhs. Then sculpture, jewelry. Sculpture means you understand or not? But you say in Hindi murti, murti. That statue kind of thing, statue, sculpture. 50,000, 35,000, and this is completely free gifted, okay? Then silver coin purchased. See, we can do one thing. I'll do one thing. I'll write something. You also write. First point is what? Wait, I mean to ask this thing. Wait. I want to ask this thing. You tell me what is money gift, what is movable property low price, no price, and what is movable property low price, what is immovable property no price, and what is immovable property low price. It's better we first decide and keep so that we can solve easily. Okay. So tell me one by one. First transaction is what? Cash gift is money gift. So we'll do one thing. I will write here. You also write. Money gift. Okay. Then two plots. Plots is movable property or immovable? Plot is a land. It is immovable. So it is immovable property. Is it totally free or at low price? See, here it is written gifted, which it is for no price. So I am just writing in short. IP means immovable property, no price. Then next one is purchase a house. House is immovable property. And have you paid full price or less price? Less price. So it is immovable property, low price. IP in bracket low. Then he purchased a land. Again, this is a purchase at low price. So land is again immovable property. So it is immovable property, low price. Then sculpture, jewelry, 50,000, 35,000. Gifted. Gifted means it is totally free, no price. See, whenever it is low price, the sentence will start in the form of purchase. Because when you pay some price, so it's a purchase transaction. Although low price, but it's a purchase transaction. So here it is movable property. Wait, what will I write? Movable property, no price. And the last point, here it is a silver coin. Silver coin is something movable. And shares are also there, shares. And these are purchased at low price. Now tell me, what is the rule for aggregation? See, firstly, in immovable property, we don't aggregate. We treat all transactions separate. It's per transaction we have to check. So see, firstly, this immovable property, all three transactions we will analyze separately. Here never do aggregation. You saw or not, I have written here per property. You don't do aggregation, okay? So first immovable property part is clear. Now what is left in the question? Money, you have to aggregate all the monies. Whatever money gifts you find in the question. See, it is possible that here you have money gift and in the last point also you might have money gift. You have to combine that. This is plus sign. See, money gift if you find, you have to aggregate. Whether that money gift point is there in the first point or last point, anywhere in the sum, all monies you have to add. But we have saw the question, in our question, money gift is only in first point. But tell me by chance, in the last point also, if there was money gift, then I would have aggregated. Because all monies you have to add and see if it is up to 50 exempt. Because see, if you keep this money gift different and in the last point also there is money gift, if you keep different, your answer will go wrong. So in the whole question, whatever money, add. But here we have got only one money gift. So this remains separate, okay? Then this will anyways remain separate. Okay, now tell me movable property, what is the rule for aggregation? All no price aggregate. And low price separate aggregation. So this will be separate, this will be separate. Can I add this and this together? No, this is no price and this is low price. So luckily they are in different point only. So we'll analyze differently. Okay. So now we can start. So first point is money. Tell me what to do. Read the sentence. Cash gift received by him from A and Z, 32,000 each. Aggregate. See, A also gave money, Z also gave money. If in the question later on also if there is money, add that also. So you should check, is there any money further in any point? No. So add this 32, 64. Oh my God, it's above 50,000. Taxable. Fully taxable. It's 32 each. So 32 plus 32, 64. So this will be taxable means dash or amount. Amount. So see here. See how I have written. Gift of money. See, money can be cash, check, GPay, Paytm. Whether given in the first point of the question or mid of the question or end of the question. You have to aggregate all money. But in aggregation of money, don't mix movable properties. See, basically in this statement you have to write the name of the income. See, someone had a doubt right now. Sir, should we write this statement full? See, basically, statement is of income. So, we have to write the name of the income properly. So, if you can write the name of the income in short, it's well and good. But if you think, no, I am not able to use such kind of brain, then copy this as it is. See, you can copy this as it is. See, regarding wordings, you don't have any tension. See, I have less space in my iPad because I want to write as big as possible so that it is visible to the students. If I write the same sentence here, I will have to use small handwriting and it will become congested. So for better visibility, I am writing in short. But if you want, you write the same sentence. What is the sentence? Cash is received by him from ANZ. Write as it is. You can write as it is. Don't worry about that. But I have written in short because I have my own reasons. So that I want to show the presentation as good as possible. And it is not wrong in writing this, a gift of money. Done? Then our next point is immovable property. See, in immovable property, anyways, we don't do aggregation. So I don't have to worry. Next point is again of immovable property. Next point, let it be. Every point is individual. Because I said it's per property. And in immovable property, tension arises when if it is at low price. Because that 10% thing also you have to check. But this is tension point or simple point? Simple. This is no price. Then you have to simply see 50,000. Read. 2 plots of land gifted to him by B and C, whose values are 3,50,000 and 50,000 respectively. Will you add or you will see per property? Per property. So first plot is above 50 taxable. Second is exactly 50 exempt. So this will become taxable. This will become exempt. So we can pass 2 different entries. In one entry, what should be the wordings? Please make wording. Gift of land from B. Then second entry, gift of land from C. Amounts, gift of land from B, 3,50,000 taxable. Then gift of land from C, dash. Because it is exact 50. And did you see I am not aggregating? It is kept separate because immovable property, it's per property. See, if this sum I would not have taken, that whole explanation would have gone waste. So this sum was must. Actually, this sum I have created in such a manner that concept which is taught to you, it can be easily implemented. Okay, so right here, see I have passed 2 entries. Can you see? Gift of plot from B, gift of plot from C. See, B's plot I have written the amount because it is exceeding 50,000, so it will be fully taxable, okay. But C has given us, he has given us a small plot. The value is exactly 50 and up to 50 it is exempt, that's why dash. But see, when you put dash in bracket, you have to write. See what I have written here. Look, read. Exempt because SDV is up to 50,000. And see this section. This is the section of the whole theory. Look here, look, wait. This whole chart which I explained, it is section 56 to 10. Okay. Means there is no section 10 involved here. Section 56 to 10 has given all these detailed provisions. If you see in the original act, it is given so lengthy. But I have done same thing in the chart form. In one small chart, everything is covered. But if you see in the original act, it goes into pages. And that also you will not be able to understand what is it. See, you are getting all ready-made charts and everything. You have to simply study. Otherwise, see, in the act, it is not given like this. This say and see, even this relative chart, everything is given in so horrible manner. See, if you are inquisitive to know how all this is given in the Income Tax Act, anytime you can go in Google, you can put a search Income Tax Act 1961. That act will come, and then put section. What there they have a column of section. Put this section, section 56, and then see what is given. You will go mad, and that time you will value. Thank God, sir is there. See why I have to say, because many students they feel this is the way it is given in the law only. Don't give credit to the law. Give credit to me. Because see, you don't give credit, but at least don't give wrong credit to someone. In the law, it is not given in simplified manner. If you see in the Google the original law, it is given in very horrible. Then done. We have done second point. Now third point. Second is done. Okay. Now third, he purchased residential house at 6 lakhs from D. Or stamp duty value is 7 lakh 50. See, first you should understand the meaning of the sentence. Did you understand the meaning of this? There is a house whose value is 7 lakh 50. But we have paid only, feel the benefit, only 6 lakhs. So we got a benefit of 1 lakh 50. Now this 1 lakh 50 you have to compare with the formula. I will do one thing, I will show that formula here only. Substitute the figures. In this question, what is the stamp duty value? 7 lakh 50. And what is the actual? 6 lakhs. And what is the difference? 1 lakh 50,000. Compare with our formula. Formula is what? 10% comes to 60,000. And 50,000 is a fixed amount. So 60 and 50, what is high? 60,000. Now compare the benefit. Are we getting small benefit or big benefit? See this greater than sign. And greater than means taxable. So this will be taxable, okay? But see, this kind of presentation we will have to show. I'll tell you how I have to show. Look here. See, firstly, what is the sentence? Purchase of residential house. See, I have written little short form, but you are right full. Purchase of residential house from D. And this working you have to show. Copy from here. See that difference of 1 lakh 50, you should feel this is my benefit. When you get a property at a lower price, that's a benefit. And benefit is kind of your income. See, you feel happy when you get income or benefit. So even benefit, government is taxing that. And it is becoming taxable because the difference is greater than our formula. See, this is a standard working you have to show whenever immovable property low price comes. Okay, now see for done that thing, done this thing. Now see for practice you will find one more such point, point 4. He purchased land from Mrs. Iyer at 7 lakhs, HDV 945. Again it is low price. So how will you do the working? HDV 945. Actual 9 lakhs. Difference 45,000. Okay, then formula is 10% comes to 90,000 and 50,000 is a fixed amount. दोनों out of the two, whichever is higher. What is high? 90,000. And this is small. So our benefit is not that big, small. See, here we can say little bit bargaining gave us some difference. And when you buy big property, you have the tendency of doing negotiation, bargaining. So because of that, you might have got the difference, but that's exempt. So show the presentation in the same manner. See, I have shown here, look here. But see here in the outer column it is put dash because it is becoming exempt. Purchase of land from Mrs. Iyer. This working is compulsory to show. Huh? Purchase of land at the most you can write at low price. See, sentence you have to write as purchase of land only. See, still if you want you can write. He was suggesting, can we write this benefit of benefit in purchase of land? If you want you can write benefit in purchase of land. You can write that. See, I told you there is no hard and fast rule regarding these wordings. Okay. If you don't want to apply more brains, copy the same sentence. But don't write he. Because statement is of this Mr. Sharma only. By the way, who is Mr. Sharma called, you know? Assessee. The person whose income we compute is assessee, the taxpayer, okay? Obviously, don't write he, but you can write purchased land from Mrs. Iyer at low price. So, regarding wordings, you don't worry much. Any suggestion you have, my answer is yes, okay. But it should be a proper English. Have you put dash here? Okay. Then, point number 4. Tell me, can point 4 look and 5 be aggregated? Sorry, by mistake. Can point 5 and 6 be combined? No. Because here it is no price and here low price, and all the movable property is got for no price, and for low price you have to keep separate. Okay. Yes, all no price is combined or low price is combined, but their combination will be separate. So try this. A sculpture and jewelry worth 50,000 and 35,000 were gifted by E and F. Should I keep separate or aggregate? Aggregate. See, this is also no price. This is also no price. Both are no price. And all the no prices aggregate. See, in immovable property we see separately. Per property, each property. But this is not immovable. See, sculpture, it is a statue kind of thing. Sculpted by a sculptor. And jewelry, these are movable property. So, movable property you have to merge. Yes, obviously I will not merge the last point. Because last point is movable for low price. And all low prices you have to aggregate separately. See, best is, this scene should be fixed in your mind. See, this is one separate set. This is a different set. This is a different set. Here anyways we go property wise. This way you should view. Means what? All money is combined separately. All no price movable property combined separately. All low price movable property combined separately. And in immovable property, anyway, we go per property, okay? So tell me now what to do. This we will combine. So combine and see how much it is. 50 plus 35, it is 85. It has crossed 50,000. Taxable. Fully taxable. Full 85, okay? Okay, tell me how will you write? Gift of, see, if it is low price, you can write purchase or if it is free, gift. There are two things only, either no price or low price. No price you can write gift of. And if it is low price, purchase of, blah blah blah. So here it is no price. So write gift of what? Sculptor and jewelry. Where is my answer here? See. Gift of movable property, sculpture and jewelry. When you add, it is called aggregate. See in the notes I had shown you or not? Aggregate FMV. We have to see the aggregate FMV is above 50,000. That's why fully taxable. Up to 50 exempt, but above 50 fully taxable. See in this chapter up till now we have come across three limits, three amounts. Minor child 1500 per child. Interest on post office savings bank account 3500. But there the amounts are such that up till that amount exempt, balance that excess amount will be taxable. But this was the third amount 50,000. Here it is little weird. If up till 50 exempt, above 50 fully taxable. Means we don't deduct 50 and see the difference. Entire amount taxable. See in COVID death also there was amount 10 lakhs. But that is a theory of gift. So there also up to 10 lakhs exempt. Above 10 fully taxable. Because it is forming part of gift theory. And in gift theory, if it is exempt then exempt. But if taxable then fully. Fully means you don't deduct and see the balance fully. Means 10 lakhs amount was also there in COVID death. Done this thing. Then last point. Movable property, low price. Read what is given. Silver coin purchased by him at 10 lakhs from G when the prevalent market value was 10.5 lakhs. And shares purchased by him at 3 lakhs from H, where the market value was this much. So there are two things here. Look, silver coin, shares. But both are what? No price or low price? Low price. And what did I say? All the low price you have to aggregate. Okay. In movable properties. Okay. Yes. Immovable property we go property wise. Okay. So movable property and both are low price. So combined. But you have to see the difference. Tell me in silver coin what is the benefit you got? 50,000. Because the coin had a market value of 10.5. I have paid 10. So difference of 50,000 only. So here benefit of 50,000. And in shares, market value was 3.3 lakhs. But I paid 3 lakhs. So difference is 30,000. So here 30,000. You have to aggregate this. Yes. See this thing in the notes, you know how I have shown. Please pay attention here. Look. In the notes I had written like this. Look. FMV minus actual price. That is what I did right now. Didn't I do like this? FMV 10.5, actual price 10. See in the notes, FMV actual price, and aggregate means similar transactions you have to combine. That's why aggregate. See here, there were one more shares transaction also. So here the difference was of 50,000 and here the difference was of 30,000 and you have to aggregate. I am just relating that how it was written in the theory, because many students they just ignore the wording. So some I understood, that's it. Some you understood, but the theory of wordings also you should understand. FMV minus actual price and aggregate means shares and silver coin you have to combine. So it is what? Taxable or exempt? Taxable, because the total is coming above 50,000. So write this in the solution. See how I have shown. Purchase of movable property at low price. You get something for free, language should be gift. You get at low price, the language should start with purchase. Make a fixed protocol. Instead of thinking what to write, make a rule. You got something for free, your language should be gift of blah blah blah. If it is at low price, purchase of blah blah blah. See, if this silver and shares were some immovable property, then in immovable property we keep separate. Then though both would have been exempt. If they were immovable property, this is 50, this is 30, both would have been exempt. But these are silver and shares movable property. You add, aggregate. There are three aggregation, did you notice? Money aggregation, movable property, no price aggregation, movable property, low price aggregation. Three aggregations. And in immovable property, property wise. Total of outer column 7,29,000. What do you do with this 7,29,000? This will be added to the other heads of income. Salary, house property, business capital gains. This gets added to other heads. And all heads are combined. Then you get gross total income. Then after that there are some deductions which are not taught yet. And then you calculate the tax. See, always when you are solving this sum, you should relate it back to the origin. Because don't we say your fundamentals should always be strong. So that basis of income tax was that first lecture only. So done this thing. See, now we have got so many questions where I can give you good homework. Because see, in this chapter few things are left. I will not say it's completely over. Relating to gift only. Look. Relating to gift only few points are left. Other than that the topic is over. But see, let me tell you one thing. If you see study material, in this topic you will find other things also. Like I'll tell you right now only. Deemed dividend, some concept of TDS you will find. But this will be done at an appropriate stage. So in case you find something else, you will feel in the class I was so confident, but looking at the study material, I have lost all my confidence. Please don't feel that. Trust me, everything will be taught at the right time. Okay. Since I have taken this as a first chapter, I cannot take all heavy things right now, like concept of TDS, etc. If I introduce right now, I don't want to spoil the subject. I have to carefully hold your hand and take it to the destiny. Okay. So other things will come at respective time. But as of now, this chapter is about to over, except few points which will be done tomorrow. Right now, you take your homework. Wait. You will get lot of homework today, okay? Question number 1. Mark. Question 1 is homework. Then one rule you don't forget. Any income which is not taught in D.W. Ramu Fakirji, is taxable. So don't think that this point sir is not taught only. And see, in our keyword D, W, Ramu, Fakirji, etc. is there. So if any income by chance you find in the question which is not covered in our keyword, rarely you will find, it is taxable. Okay. Question 1, then question number 3. Okay. This family pension you will be able to present. See, in case you want the presentation, see, in our theory, today only family pension I have shown the presentation. See, like this. In the homework which I am giving, this point is also there. Family pension today I taught or not? So, in case you feel how to present, sir has given homework but I am not understanding how to present, you can use this template. Okay. Because in this question, this family pension will come up. See, once you see family pension, by default you have to take standard deduction. 1/3 or 15,000, whichever is, remember or not? Yes, if it is army employee, then it is fully exempt under section 1019. But this is not a case of army, normal employee. So there you have to use that formula. So this question 3, 4. Yes, many homework. Today you don't have any lecture. So what you will do at home? Imagine if you had the lecture today of some other subject after my lecture, you would have sit here or not? So that is the thing. That's why I thought today that I will teach at this stage so that today's free lecture will be utilized. No. Imagine I have got full right to make you sit till 8:30 here. In fact, you should sit here only and finish the homework and then go home. That option is also open. So question 1, 3, 4, 5, wait. In fact, actually I can give everything, but now you tell me what is your appetite. Wait. I'll tell you till question 7. Okay, till 7 you can do. So that after that what will remain? 8, 9, 10. 3 will remain. That I'll give in a different lecture. Okay. So till 7 you can do. But see, in 7 you will have a doubt. See, this gold monetization scheme, it is for gold bonds. You know, last lecture I had explained there is something called gold bonds. Yes. In gold bond, what happens? You deposit your gold to the government and you get a certificate. On that, every year you get interest. And on redemption, you get your gold back. So that is called gold monetization scheme. Means your gold is getting monetized. Otherwise, the gold sitting at your home is lying idle. But if you give out to government, you can earn interest. So that is a famous scheme called gold monetization scheme. And if you remember in my lecture, I told you this scheme has come in India twice. Once it came in 1999, second time it came in 2015. So this guy has got 2015 scheme. So this is our gold bonds only. Huh? Otherwise, for this small point, your answer will be stuck up. So till question number 7, all are homework except question 2 which we did in the class. So total 6 questions for homework. Please do the homework and come. Please revise and come. Please come on time. Please don't ignore me. I will check everyone's notebook for this all 6 homework question plus this notes also you have to update. Okay. See, this notes is better you write in a separate book. This iPad notes, this thing. This you better write in a separate book and sums you keep it in a separate book. See, it will be helpful because see, on exam day, I'll tell you the reason. On exam day, when the time is very less, this notes you can recap fast and you can complete the whole subject on exam day. But at that time, in between, sums will come. It will not be organized properly. You will find messy. All theories should come together in one small booklet. Okay. So your homework is 6 questions and this iPad notes also you have to jot down. We'll continue tomorrow. Yes, iPad notes is there in the app. I didn't check your homework. You did the homework or not today? iPad notes. It will be there in the app. Yeah. Yeah, right now only I'll put. Yeah. Every lecture I follow. I am very sincere in my work. As soon as my lecture is over, I will upload the notes in the app so that my students can copy. So you also become equally sincere to please do the homework and come. Please revise and come. Please come. Please come on time. Bye.